Woo! We are live. Happy Tuesday, everyone. CPI day. We'll be talking about that data that came out this morning. We'll be talking about inflation in general, different steps you can take to fight inflation. Because look, guys, at the end of the day, if our dollar is becoming 9% less valuable in the span of a year, hey, that just means, hey, you got to roll with the punches. That just means we have to find investments. We have to find places to put our money where we're going to make more than 9%. We're going to beat inflation. So we've got a great lineup today on the show. David Green will be joining us in a few minutes. We'll be doing some live trading with David Green. Always excited to get David on. He's feeling better, so thank God. Gareth Soloway in the money stocks at noon will be coming on. We'll talk about some trending tickers with him, seeing what he likes right now. And then Ryan Duffy, this will be an interesting interview at 12:30. He's from Payload Space. It's a website that covers essentially all the companies and stocks in the space industry. So we'll be talking about, Virgin Galactic, SpaceX, you name it. We'll be talking about space at 12:30. And then at 12:45, we've got Robert Roy from Wealth Builders HQ. So packed lineup on the show today. Let's go ahead and roll that intro, get the show going, and then we'll bring my man, David Green, on.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
All righty, y'all. Bringing on David Green. David, how you doing today?
We are doing well, Aaron. How are you?
Pretty good. I mean, the markets, like we talked about it before you hopped on, they were up, a lot this morning, gave up a little. Now we're ripping again. So I'm going to go ahead and share your screen. Let's see what you're watching. I know it's kind of crazy markets like we've been in, so I know you're moving quick. We'll just try to follow along.
You won't have any problem following along. It has been a crazy day, man. It's crazy. I mean, a half hour ago, the market looked like we were going to break a lot of support and keep heading down. And here we are 30 minutes later, we're almost pushing the highs from this morning on the CPI data, which was, by the way, wonderful CPI data. I think inflation was only 9%, but the language that they came out with was that we think that the inflation has probably peaked.
Yeah, and I mentioned to you, David, I got to see the Chicago Fed Bank president speak yesterday, and he honestly was pretty hopefully optimistic. I mean, he didn't make any predictions, although he did say, someone asked him a question and said, I don't know where this poll came from, so I haven't fact checked this, but some reporter asked, he was like, I saw a poll that said 81% of Americans, 81%, think that we're going to see a recession in the next year. I was like, I didn't even know 81% of Americans could agree on anything, but when they finally do, it's about a recession. And he said, no, I disagree with that 81%. He says, I don't think we're going to see a recession in the next year or two. He said growth might be a little bit slower, but that doesn't mean we're not going to be growing, which is the definition of inflation.
What's the definition of a recession, so we can tell everybody? Technically, is when we have 3/4 of negative GDP growth. That is technically when we're in a recession, just so everybody knows. I certainly don't know if he doesn't know. And I can tell you, if we are, and it won't last long, we're just in a different time now. Nothing lasts long anymore. We've got all this stuff that's going on in Russia, and I don't see how that ends well, even if it ends. I mean, our relations are going to be really strained with them and everybody around the world. So whatevs, the market is always climbing a wall of worry. That's what it does, right? And it's forward looking, and as long as we don't have uncertainty, the market can keep going higher. That's the bottom line. A little longer term, we're right in the middle of everything. I really thought that showing you guys a daily chart of the spiders, and if we look yesterday, okay, we exactly came down, and our level is right around 440. I think we made a low of 439.92. That's our 200 EMA on a daily chart, right? So we got exactly to our 200 EMA yesterday on a daily chart, and we bounced off it. What I was thinking, and who knows, it might still happen. Next real spot of support in the spiders is around 427. You know, if we go down from here, we'll see. Look, we all want the market to go up, right? That's
I do. I know I do.
Yeah, everybody does. But as far as what we do in here, we're just looking for short-term trading opportunities. When is there not uncertainty? A lot of times it's not. There wasn't any uncertainty for a couple of years when the market went straight up, right? So, and you know, if we look at it, the last couple of years, what was the market up for the last 2 years? 40%, 45%, right? So, you know, and I think at our worst this year, if we go to a weekly chart, we were down, what, 13 or 14%? I think at our worst, at our lows, 13 or 14% from the highs. So,
yeah, and I mean,
in the middle of nowhere.
And from last Friday to, you know, at the close yesterday, the VIX had jumped about 20%. So we did see a rise in uncertainty. Of course, you also have the COVID situation going on in China, kind of shutting down some things again. So there is some uncertainty out there right now. But the question is just, you know, are we able to maintain and kind of stay up here? Because if things do fall off the rails, like you said, David, there's we'd have a way to fall if we fall through some of those support levels.
Yeah, no doubt about it. No doubt about it. And, you know, everything with me is technical, right? So 440 is the line in the sand now again for the spiders. If we test that another time, then I think we could have some problems. But as far as trading is concerned, you guys know what we do, right? We're just looking for short-term opportunities that present themselves during the day. And we always hope that the market goes up over time. NVIDIA got to we had a really big level in NVIDIA, which I can share with you guys, on a weekly chart. And we didn't come too far away from it. You know, 215 was a weekly level in NVIDIA, down from 280. That was a spot that we were looking to get a little aggressive in it. And we didn't get that far away today. We got to like 216 and change, 216.66, and we had a nice bounce up. I am not positive on the market as a whole, short term anyway. We'll see. Yeah, 216 was yesterday's low in NVIDIA too. I think we had 3 or 4 trades today. I think we lost 25 cents on one and made money on all the other 3. I'm just trying to see if it's not the time to get bullish yet. Yeah, I mean, it's just an inside day now in the spiders. Look, when will I really get bullish in the spiders? Look where we are on our daily chart now, right? All right. So if you look, the first time we tested this 450 level, guys, and that was what, 3 days ago? Only 3 days ago, right? We could not get above this downturn, this trend line down. So for me to get excited a little longer term, we have to clear this 450 level, you know, with some conviction. We couldn't get above it. So that's set up for a short on the trend line. We'll go weekly just to get a little bigger picture. And weekly, it's just a bloody mess. You know, we're sitting right about where all this support and resistance is. So we're in nowhere's land right now. But short term, we got to get above 450 to get a little bullish again. What's going on? I made money on all 4 of my trades. Good job, Ken. Yeah, all right. Let's talk about Boyle, guys, because this is a stock that we're looking at for a possible swing trade. There are day trades, so things have to set up based on the charts. That's right.
And Boyle's the natty gas
this is the
ETF.
Nat gas ETF, correct.
Natty gas.
Yeah, let's put a little order out, guys, if we can short it at 85.05. That's getting a little stretchy poo-pooed up there. But what I'm looking for in this, guys, is to do a swing trade. And I'll show you how we're going to do it. So if we look at Boyle, and you guys remember when I talk about reversal swing trades, and I'll go over it for you guys. For those of you who are swing trading out there, okay, this is what I look for. Look at the RSI in Boyle now. On a daily chart, we're up at about 83. This is day 1. This is day 2. So if we get another day in Boyle, that's going to set up for a nice short for a reversal swing trade. We are right now 14 points above our closest moving average. So this is really getting stretched. So I'm going to show you guys a good way to do this in a cheap stock. Cold is the exact opposite of Boyle. Okay. So, and we've swung trade this a few times and made a couple of points on it. So tomorrow, KOLD will be the day if Boyle is up all from here to start a little swing trade. And I'll tell you what we'll do. Just for everybody out there, we'll start a little swing at, if we get to around, let's see if we got any other pivot points. We really don't. Write it on your list. If Boyle is up again tomorrow, start a little swing trade in cold. Start with your smallest amount. Add to it if we have to add for a couple of days. Boyle is getting really extended on the upside. So that's a little trade that I can leave you guys with. And
what's the inverse ETF to Boyle?
KOLD.
JOLD?
KKK.
Oh, KOLD.
KOLD. Yeah, and you can see as Boyle's been going up, we'll go to a daily chart.
Yeah.
This thing has just been getting the absolute. This thing was $24 2 weeks ago, 14 days ago. Now it's $10.
Holy cow.
And we're getting close to the RSI. We're at about 22 now. And like I said, we've done this in the past and taken a couple of dollars out of it. So I mean,
energy across the board's having a great day. Look at BTU up 10%. I mean, BTU's chart's been so strong over the past.
B2 again, guys. Tomorrow would be the day. All right, let's see if we're getting stretched. Let's go right to a daily, and we're not. I mean, the stock, it looks great, right? But for me, if we're looking at a swing trade, we're only a couple of bucks above the moving average. We don't have 3 days in a row up, and look at the relative strength, right? So this has some room. If I go back here, guys, and show you technically, look at when BTU got here. We had a 78 RSI right here. Stock got to $27, which was $7 above the moving average. And look what happened. The next day, the stock went down almost $5. So these are the opportunities we look for when we're looking for. Yeah, we're talking about nat gas, Mike. Guys, we're talking about nat gas. We're not talking about oil. Yeah. These are the opportunities we look for a reversal swing trade. Look, I mean, this was up 6 days in a row. Got the RSI and went down 6 points the next day. Right now, it still looks good. I mean, we can get a couple of other days on the upside of that. But again, let me show you guys Boyle. And we're almost there. We are almost there. You know, when a stock gets 25 to 30 points above its moving average, you're going to get a reversal. I might have said oil, Jay, but I meant nat gas.
Yeah, we were talking about nat gas. We were talking about.
Did I say oil? All right.
Boyle. No, we were. You probably said Boyle, talking about the nat gas ETF, and it sounded like oil because we were saying Boyle.
Right.
But yeah, cold KOLD is the inverse ETF to Boyle. Someone's asking about gold in the chat. What do you think about gold right now?
Let's take a look.
I think
when I look at gold, I look at the ETF GLD. That is the ETF for gold. And we always go right to a daily chart. Let's see where we're at. Yeah, I mean, it's not extended in any way, shape, or form. It's only $3 above the moving average. So to me, that tells us we have a little more room in GLD to the upside. Not extended at all. We'll go weekly just to take a little peek. Same thing. If we look at weekly, we almost pulled back to our trend line. You know, a couple of weeks ago, around 176. Now it looks good. It looks good. I still think we got some room to the upside in that. Silver. GDX is the miners, yes. I think it's GDX and GDXJ. This is the gold miners, GDX. Same thing. It's not stretched at all. I think we got some room to the upside. And GDX also. That one looks good to me too. We've been concentrating on NVIDIA today. This has given a bunch of opportunities today. This is something that we like to trade. So looking at it right now, kind of sitting in the middle of everything. We had a nice bounce off the lows from 217. And we got a little short ski if we could spike up to like 221.70. So let's put a little order out there, guys and girls. For those of you who don't know, we are day traders for the most part. We do a bunch of swing trading. But for the most part, we are day traders. But again, man, we can talk about anything you guys want, short-term, long-term, whatever it is, we can talk about. I've been swinging oil and natty gas, buying the dip. Yeah, absolutely. All I'm saying, happy is it's getting a little stretched out now, short-term. And that's what I'm looking for. You know, if I was to get into Boyle short tomorrow, let's say it spiked up to 86, 87, I don't know, whatever it was, I'd look to make between, $3 and $6 on a pullback from it because it's just getting really stretched out. Boyle is not something that everybody can short sometimes because it's an ETF, and sometimes it's hard to borrow on the short side. So that's why we do the opposite with KOLD, and we'll buy the KOLD. How's everybody been doing, Chet? Let's ask a question, Aaron. How many people in this room, by popping up a one, are actively trading every day? Let's see.
Actively trading every day, like you mean they're day trading? They're in and out of trades on the same day?
Day trading, do 3, 4, 5 trades a day. Do we have a lot of active day traders?
Yeah, go ahead and put a one in the chat if you're actively day trading.
I had a few. So more people are looking at the either long-term investments or the swing trading, right? I'm going to assume. Even in my sleep, Mike. Well, one thing that we learn is you turn it off every night. We don't take positions home with us unless we're in a swing trade. And we just walk in the next day. Tomorrow's another day. So there are a lot of people who are trading all day long, which is good. I have seen so much crap out there in the last, I don't know, month or so of people who are claiming to be actively trading, but of course they don't prove anything to anybody.
Chad's actively day trading. He's got a nice golf swing too. Sorry, what were you saying?
Chad? Yeah. What's your handicap, Chad?
I don't know. He said 1.
Oh my God.
No, that's what he said.
Was that a 1 to trading or a 1 to golf?
Nah. What were you saying though, David? Sorry, I didn't mean to cut you off.
I don't remember.
I got distracted because up here in Michigan, it's finally starting to get warm, and someone here at the office invited me to play golf on Friday because the market's closed, and so now it's all I've been thinking about.
Excellent. Are you a good golfer?
I mean, I can hit the ball. You
can get it around the course.
No, Chad says he's a +2. There's no way. Is he really? Wow.
Maybe he is.
+2 is incredible. Yep. Oh, he used to play professionally. Chad, email us, shows at Benzinga. I might need some golf tips. I'm going to play my first round of the year on Friday. I'll probably shoot somewhere in between 80 and 90.
That's good. So between a 15 and a 20, that's excellent.
Right? Yeah, I don't know.
When I worked on the Florida Exchange, I used to golf a lot, and I think that the best I ever was, I got to like a 6 or a 7.
That's pretty good.
Yeah, no, we played a lot. My partner was a scratch golfer, and he belonged to Sands Point Country Club out on Long Island. This kid was, it's just such a beautiful thing and I don't want to talk about this too long, but it's a beautiful thing to watch people who know how to play golf and just the way they hit the ball. It's incredible, right?
It is. Anytime you're playing with a guy who's, that like next level, like a level above just being a really good casual golfer, it's like, wow, that's a different sport, when they're on, and it's really fun to watch. What are we looking at with NVIDIA here? Are we setting up for a trade?
Maybe. We're going to look at a double bottom in NVIDIA now because we made a low earlier this morning of 216.06. We went up 5 points, and we could look. It could not get above our resistance level right here on our 30 EMA. I think a couple of people got this short trade, 220.74. So check it out. When a stock is in a downtrend like this, we look for it to get up to our 9 and 15 EMA. This hit our 30 EMA at 220.70, and it's given a $1.50 trade off that. So when we're looking at the charts, guys and girls, when our moving averages are above where a stock is trading, that's a resistance level where we might short a stock. And when the moving averages are below where a stock is trading, which we have none in NVIDIA, that's where we look to buy a stock. So we'll look double bottom in NVIDIA now. 216.60 was the low. So we'll pop an order out there. And you'll hear me say, are we doing a full trade? Are we doing a half a trade? And in NVIDIA, if we were to spike down to this 216.60 for a double bottom, we will do a full trade and be a little aggressive because that would be straight down $4.50 from where we just were. So we'll be looking at NVIDIA if we can do a double bottom. I mean, the whole market has been just, really spiky up and down. And today's a good picture of what the market's been doing lately for days and for weeks, right? Big spike up on the opening, big spike down in the morning, big spike up. Now we're coming back down to test levels again. So, I understand why some people stay away from day trading because you really have to use your technicals and you really have to know what you're doing and just to take your profits in a trade. Every time we get into a trade, I'm looking to make between 25 cents and $2, depending on the price of the stock. I have people in the private trading room that are just learning, Aaron. They're trading 10 shares, 20 shares. And I have people who are trading thousands of shares every time they do a trade. Shouldn't matter how many trades how many shares that you're trading. It doesn't change the techniques and the way we go about each individual trade that we get in. It's very quiet right now. I had some people FOMO Veru. I don't know if you guys have ever heard of Veru.
We have. I've been seeing it. It's VERU, right?
Yeah. 2 days ago, we went from 5 to 15 in one day, and now we're giving a bunch of that back.
I see that. Back down to 10.
Yeah. These are what I try to keep people away from, because 99% of the time, these things do not end well. And I'll say it as this is happening in the room. This is not going to end well. When a stock goes from 4 to 15, chances are it's not going to end well. And it's not right now. But this is where people get FOMO. And you got to try and stay away from that, guys and girls, because 90% of the time, these things do exactly what this is doing now. So stay away from that stuff. We don't even get involved. 90% of the time, they don't let you short those stocks when they're going up like that. And that's part of the reason why they go up like that, right? But there's been 100 stocks that have done that. And is Vero a SPAC? I have no idea. I don't know what it is. I don't know what they do. Anyone know?
I don't know. It doesn't matter. They went up. I mean, let's see. It's still up. It does. I don't know. It's weird. It looks like it was trading pretty flat for a while. Like it didn't do anything, and then it just spiked out of nowhere.
To me, I don't care what a stock does. And a lot of times we'll trade stocks that I have no idea. It's the first time I've ever looked at them in my life. So as far as trading is concerned, it's a drug stock, and they had news on COVID. There you go. Thanks, guys. Yeah, so it's a drug stock, and they had news on COVID, right? That's the whole thing, MD. Yeah, so if you ever get involved in these things, guys, let's take your money and run, right? Let's look at AMC, guys. Okay? Look what happened to this thing again, and it was only a week ago, right? Look what happened to this thing. The stock went from 20 to 35 in 2 days. Look where we are now, right? And there are a lot of people that are in AMC that I hear from every day, to the moon. Will you stop calling me? Hold on one second, guys.
Someone's trying to get a hold of you.
Jeez Louise.
IRS.
Hopefully not. I mean, we got 3 days before we even have to file, right, guys?
Yeah. I don't
So
know.
this is AMC, and it does it every once in a while, right? And if you don't take your profits when something like this happens, here we are. You guys know how I feel about AMC. I'm never a fan. GameStop did the same thing, right? I think GameStop has more going on for it than AMC does, without a doubt.
I agree.
This did the same thing too, right? We went, I don't know, in 2 days we went from 130 to 200, and we pulled back 50 points. So don't get caught in this stuff. Very, very hard to get out of it once you get caught in that stuff. Right?
What about
Apple? I saw an Apple question.
Oh, someone's asking about Apple. Yeah.
You guys know how I feel about Apple. I've owned Apple for 35 years, since I was a young buck. I think it's always a buy any big dip and hold on to it forever. That's just my thoughts about Apple. And it's worked for 20 years. So it's one of my favorite stocks of all time. I think it's like I said, anytime you get a big dip in Apple, it's just a buy, and hold. That's my opinion of Apple. A couple of levels if we want to look at. I mean, if you ever get pullbacks, 157.
We talked about this a couple of weeks ago, David. There's a few stocks in our tier of just buy on any weakness, right? And Apple's in that category for me.
Yeah, me too.
Yeah.
The video recently, okay, and I like the video also long term, but they have some challenges, and they had some price. They're having some pricing issues, and it's another stock that I love though long term. But look how bad this one's been, right?
I know. I love it. I love NVIDIA long term too, but you're right. I've been more, I would say, aware of certain headwinds that NVIDIA has over the past couple months as well. I mean, people talk the Taiwan, if something happens with China there, Taiwan's a big risk for NVIDIA. But on top of that, like you said, some of the pricing things, maybe demand for some of the gaming, or a lot of their chips are used in crypto mining as well. So if ever, there's a big drawdown in people mining crypto, that could be another headwind for NVIDIA. So I think there are plenty of, I think just things to be aware of as an investor. But it doesn't change I'm not going to go sell my NVIDIA. It's just I'm aware of it now.
Yeah, exactly. And like I said, I will probably start to put a little away if we get to this weekly level, right around 215. Then we're down 75 points. Now, again, that doesn't mean it's a bottom. Look where my next level is on a weekly chart in the video, 140.
What about we have the banks reporting. Is it this week or next?
Tomorrow, my man.
Tomorrow. So let's see. I just
Who's
want
that? Was that Spencer?
Yes, I'm here, and
What up, Spence? You still getting married?
Every single week. Why am I so high, though, is my question. That's better.
What'd you do before you came on?
I'm in the chair, Aaron.
Oh.
Do I still like cold at 10? Yeah, guys, we can start a little cold if we get to 10. Yes, Steven.
I'm gonna leave you here for a second, Spencer. I'll be right back.
If you guys don't know, I just got through dealing with COVID, and it was 2 weeks of hell.
Yeah, David, I'm glad to see you on the stream here. It seemed like it was not a nothing burger for you.
It could have been a lot worse than it was. It never went into my chest.
Oh, that's good. That's good.
It was just miserable and exhausted and couldn't move for 10 days.
Oh, man.
But never had a fever or anything like that, so we were lucky. My wife had it too. And
it's so interesting how it affects people differently,
Yeah, it does, and for longer periods of time, right? I still have this. I'm still stuffy with this cold and stuff, and I went to the doctor. He said it is what it is. That's it.
Yeah.
You guys know Pete. I mean, Pete's been dealing with symptoms for 2 years now.
Yeah.
When he first got it. Yeah, guys, when we put out cold at 10, we'll start buying a little cold at 10.
I mean, I'm still dealing with it a little bit myself. I had it in October, and I'm still, I still wheeze a little bit. I still get very winded when I exercise. It's like it's different than it used to be.
Yeah, like I said, it affects different people in different ways.
Yeah,
but we're all good. Let's talk about trading.
Let's talk about trading. Okay. So, what do we got here?
Questions from the anyone out there? Oh, one thing I want to do, guys, because I know we don't have a lot of time. Okay, you guys know I don't really self-promote or do a lot of that stuff. But tomorrow night, okay, we are doing a free webinar at 7 p.m.
Hey now,
all are invited. Go to WallStreetGlobalTradingAcademy.com. What is that? WSWallStreetGTA.com. If you guys can post that for us, WSGTA. Tomorrow night, 7 o'clock, we're going to hang out for a couple of hours. We're going to talk technical analysis. We're going to talk trading these markets. Anyone who comes tomorrow night will get 5 free days of mentorship in my room.
There's the link up there. It's on the screen, bottom left. WSGTA.com.
Yeah, come on in tomorrow night, guys. Absolutely free. Doesn't cost anything. We'll talk about individual stocks. I'll give you some technical analysis, and anyone who comes will get 5 days of mentorship free in my room.
Hey now.
Do we have any stock questions?
Good question.
Anything you want to talk about? Good
question. I mean, yeah, I want to talk about like inflation, but that's not like a stock specific thing, really. What
we talked about it a little bit, me and Aaron.
Yeah, I know.
How 9% inflation is a good number.
I know. I know. What have we come to, David? What have we come to? But here, let me check on the chat real fast. See what y'all.
DA saying Zim.
Yeah. DAC and Zim. AW just bought some out of the money puts that expire on Thursday. So okay.
And which one? DAC?
He said both of them. I think.
All right. So yeah, I'm looking at DAC, guys, and again, I will start. Yeah, we're going to start buying cold at $10 for a swing trade for everybody out there who wants. It's not stretched enough for me. We still have a 33 relative strength. Okay. Yeah, we're down, and we're down significantly from the high. But I want this relative strength to be around 20 when I start getting into a swing trade. So it doesn't mean it can't bounce from here. I'm just telling you, we're really patient and disciplined, and I'd want it to be lower than this. We're still at a 33 RSI. I mean, could it hit? Look, our 200 is at 79, let's say. Then I'm definitely interested. But I want it to be a little more stretched out to the downside for me. And we'll look at Zim. Zim, same thing. Now, Zim, guys, we are on a huge level on a daily chart, right? It was about 56 and change. So if we can get back above this 56 and change and hold that level, that's positive. If we can't, Our weekly level is 48.30. So could this get to 48.30? Yeah. And would that be really stretched out to the downside on a daily? Yes. So again, you need Zim to hold right around these areas, 56 and change. Otherwise, we could see the 48. But again, to me, guys, on the daily chart, I'm not stretched enough relative strength. And it doesn't mean it's going to bounce, but I can tell you this, guys, when we get these reversal swing trades where something's stretched out for a few days and has the relative strength above 80 or below 20, we get $5, $10 pullbacks in these things. That's why I'm so looking at Boyle so closely now, okay? Because we're really stretched out. This thing is 15. Look at the RSI. It's over 80. It's 83. So this is what I'm looking for when I'm looking to get into a reversal swing trade. Wait for the relative strength, either to be below 20 or above 80. That's just, my tip to you guys. So as far as ZM and DAC, I don't know. I think they can go lower from here. Doesn't mean they're going to. Let's talk about banks for a couple minutes while we have a couple minutes, right?
Yeah, we have the banks tomorrow, so it's good that you mentioned that. Tomorrow morning is when we'll get the first of the banks, but I think most of them are actually on Thursday. Jpmorgan's tomorrow. That's the big one. That's the largest bank in the country.
Right.
So let's maybe start there.
Yeah, I mean, here's the index first, the FAS. Okay. This is the index, the financial index for all
that's
the
that's the leverage fund.
Correct.
Yeah, that's the leverage ETF. That's the bullish, right? Leverage fund.
Correct.
Yeah.
So this is what I look at. It gives you, a view of all the banking stocks, and we're kind of just sitting in nowhere's land. So, which one you want to talk about individual?
Well, Jpmorgan will start there because they're tomorrow morning.
All right, let's take. Yes, they are tomorrow morning, 7:30 a.m. Okay. Look, the chart is not great on a daily chart, right? I would say the first spot we got to get above is like 135 to reverse this little downtrend. That would be my first spot. Let's go weekly, though, and see if we got anything here. Now, 127 is a very big level to the downside. We almost got here. If you look on the weekly chart, right, first time down, we almost got to that 127, and we bounced 16 points from there. So 127 is a gigantic level on the downside because we don't have anything below it. So, look, what's the expected move in Jpmorgan? Let's take a look.
Oh, good question. You can find it quicker than I can, probably. Let me look right now.
Yeah, hold on.
I can do it, though. Give me a second.
Nah, you do it. I can't get my main screen up.
4%, which is what? What's that, like $3, $5?
$4, $5? Yeah, it's not a lot.
$5? $5, it looks right.
Yeah, that's not a lot. So if you take the $5, right, that puts you right at that 127 level on the downside. So I would look to see if it can hold that 127 level if we go in that direction. And above 135 would be positive. That's a great point, MD. Let's talk about that for a minute. MD says, so options. The only way I ever trade a stock going into earnings is options. If you buy or sell a stock going into earnings, that's just gambling, right? So, a couple of things you can look at. 127 puts, 135 calls. That might be something that I would look at on both sides. Or if you don't mind being long Jpmorgan at some price, you can sell a lower put. Sell a 125 or a 120 if you don't mind getting into a position in that. But only options. That's the only thing that I would do in the options.
Yeah.
Bank of America, is that tomorrow too?
No.
I'll tell you this, all these charts are going to look similar, right? Look at this. This is bank.
When is Bank of
daily.
America?
Let's look at Jpmorgan. Same chart. Let's look at Goldman.
Wait.
They're all the same chart. Wells Fargo, maybe?
Shoot. Wait, when is Bank of America? They're not on my calendar.
I think Wells Fargo usually comes out.
Wells Fargo is Thursday. Wells Fargo, Citi, Morgan, Goldman are all Thursday. What
There you
the
go.
hell's where's Bank of America?
And all the charts look exactly the same. Every single one of them. They're all below all their moving averages, looking for to see if they can get going to the upside, but they all look the same. Every single one of them. I think oil's going the other way now, guys. You son of a beeswax. Yeah, look at that. Got really stretched out to the upside. Now we'll see what happens. No trading on Friday. That is right. Bank is next Monday. Okay, thank you. No trading next week.
No trading. No trading this Friday.
On Friday, yeah.
Yeah. Bank of America's Monday. Thank you, Buffalo. That's why I wasn't on my calendar for the week because it doesn't report this week.
PPI is tomorrow. That could move the markets a little bit.
PPI, we know it's going to be hot. Or maybe CPI is a hint that it won't be as hot as some fear, but the CPI was the bigger number. David Green, we got to wrap it up. So it's great to have you on. Great to have you back. Glad you're feeling better, and looking forward to next week, man. Have a good rest of your week.
All right, keep me up on your marriage status, please.
Sure.
No news is good news.
No
David.
news is good news.
All right, guys. Love you guys.
Nothing to report other than the fact that I'm having a heck of a time trying to find a spot for a damn rehearsal dinner. Easier said than done.
Do you know where my parents had their rehearsal dinner?
Disney World?
No.
No. I don't know.
But it's a place you know, so...
TGI Fridays?
No.
Applebee's?
No.
Am I on the right track?
No, it's not a chain restaurant.
Oh.
It's a single location that I guarantee you know.
Busch Stadium.
Close. Very close. Not it.
I don't know.
Fenway Park.
Oh, that's cool.
Yeah.
That's fun.
I wasn't there, but...
You weren't there, really?
I heard
well,
some people are. Some people, people have
that's
kids
true.
now
That's
and
true.
they get married later.
All right,
so.
let's bring on... I think Gareth Soloway is lurking backstage.
He is, and he's been waiting. We're about 7 minutes overdue, so let's go ahead and give Gareth our special intro. And Mr. Soloway, how are you doing on this fine Tuesday afternoon?
I'm doing wonderfully well. How are you guys doing?
Good. Where are you located in the world again?
Just outside of Tampa, Florida.
Just outside of Tampa, Florida.
Tampa Bay.
Yeah,
I see
that's right.
RB is saying tea time in the chat. I don't know what he's talking about, but I'm down. Just tell me when it is, and if in
Dude,
my area.
I don't know.
I've been so distracted by golf today.
We don't need more golf in your head.
I know. So, I don't know. Garrett, do you golf? You're down in Tampa.
You know what? I used to live on a golf course, and I had gotten decently well, and then I haven't played now for about almost 10 years, and my game is not good right now.
Oh, wow. So you weren't part of the crowd that got back into it during COVID?
No. I was the crowd that had kids during COVID, and then that kind of took its.
And you were traded. So you either, if you're a guy, aged like 18 to 50, you either picked up two hobbies during COVID: trading stocks/crypto or golfing, or maybe a mixture of both,
Or video games.
or video
Or
games.
kids.
Or you had kids.
Or you had kids. Well, I
did none of those things.
Well,
what is that?
Well, hold on, because
that's not true.
Right
I
when
traded.
COVID hit, a lot of people anticipated oh, everyone's home, everyone's gonna be having a lot of kids. But really, now the data's coming out is that we actually saw the birth rate decline during COVID. So that's interesting.
I didn't actually see that.
That's
Really?
interesting.
It is interesting. All right, Gareth. What are you trading today?
So I've been accumulating a few short positions. I've also been accumulating a few long positions. Let me throw up my charts here so we can take a look. One of the stocks I've been accumulating on the short side is Bristol Myers, very extended.
You are shorting Bristol Myers?
I am shorting, and I love this reversal
Wow.
candle yesterday we got right up here.
Oh,
This is
again,
ticker BMY, correct?
this
BMY, yes.
I more power to you, my man. You're shorting a rocket ship. I hope it. It's all.
Think about it, right? When does at some point a rocket runs out of fuel, doesn't it?
Yeah, you're not wrong. We all want to be the one to come in and call the top here. So tell us what you saw, though.
All right, so what I'm looking at here is you got this resistance point up here. If you go to your monthly chart, you got to go back a long way.
20-year high.
Yeah, but look at this. Take this high, connect it to the high from 2016, and what do you get? Boom. So I guess my point is that you never want to short a stock or go long a stock without factors, right? You need some sort of some sort of thesis, and the thesis is you have 2, 4, 5 straight up candles on the monthly. So obviously it's extended. If you look at the RSI, it's a ridiculously extended, and then you have this beautiful trend line that goes back to 1999. And it's hitting it now. So all I'm doing, listen, I'm not trying to call a multi-generational top or anything like that. I'm just saying as a swing trader, I'm picking up a little bit on the short side here, looking for a pullback to maybe $69, $70. Not a bad trade, almost 10% on a swing trade here.
All right.
Yeah, I think that's interesting. And I know I've made this point on the show before, but I want to reiterate it that I've made some decent money shorting stocks when they get overextended that are kind of like Bristol Myers, stocks that are more more value stocks that don't move that crazy, because the implied volatility is not baked in a lot of these contracts. So if you are holding some puts and this comes down, 3-4% over a week or two, it's significant. And because it's not typically a mover, if it moves in your favor, the contracts become worth exponentially more than what you paid for.
Yeah, no, I agree with you on that. The options on these type of stocks, much more attractive for me if I ever trade options to do these type of things like a Pfizer, a BMY versus, the crazy premiums that they're putting on some of these like, Tesla,
Tesla, Nvidia, you name it. So
exactly.
Okay, so if you're not trading, so you're just selling the stock, you're just shorting it outright.
Yeah, I'm just shorting it out right up here. Super liquid. I mean, it trades tons of volume, so not very hard to get the shares short. And yeah, I'm just looking again for a move down. I think I've accumulated like 8,000 shares or something on the short side, and just a little pullback to $70. I'll take that money and run if it gives it to me. And again, always risks involved. I heard your previous guest also talking about natural gas, and the UNG has just gone parabolic here. Let me look at the actual natural gas chart here. And this is one I've started to really kind of look at very, very closely and starting to accumulate. This is a monthly. Let's go back to a daily chart. But I mean, just a remarkable extension move here. Really just incredible. One of the things I'm seeing on this, let me get rid of this old trend line here. But if we put in another trend line, you take this high here on natural gas, you're now violating that high pivot right there, which to me tells me it's now getting overdone. So again, we know that there's a risk with what's going on with Russia invading Ukraine and disruptions like that. And I'm sure that's playing into why this has run so far, so fast. But I always look at, I don't know if you guys have noticed this, but I've noticed historically natural gas is a 2 to 4 week lag to oil. And we saw oil top out about 3 weeks ago around 130, 120, and it's come in significantly. So I'm looking at that lag period as maybe a pullback in the next week or so on natural gas.
Okay, that's interesting.
So what with natural? So what would you do here? Would you short like a specific name like LNG, or how would you play this?
Yeah, I think the big ways to play it, like you mentioned, LNG is a great way to do it if you want to look at the stock. And you can see this. I mean, what an incredible run on this stock. But that's one way to do it. And then another way, you could also buy KOLD, which is a double ETF on the short side. You get a little bit more bang for your buck out of it this way. But remember, folks, natural gas is very volatile already. So if you're going to play this, I do recommend doing smaller amounts than you would on a single ETF because you're getting so much volatility. Just today alone, it's down 5%. Yesterday, I think it was down 10%. So it does really move. So you don't want to put a lot of capital in these plays. Got
it. All right. So you did mention that you do have at least a couple things that you like on the long side.
Yeah.
Let's flip over that. Let's go. Let's take our bear hat off and put the bull hat on.
Hold on. Let me change my hair angle here. No.
I was liking the bear hat, but all right.
So for me, I'm looking at plays that have come down meteorically from their multi-year highs, like a Zoom, and they've had that big bounce that we saw with the tech stocks, and they've now retraced. So you're starting to get these kind of bullish pattern formations beginning on the charts. And that's really what I'm playing. It's not a long-term play, as I think the overall equity markets will head lower. But I do think that a name like Zoom or a Teladoc, I think Teladoc's actually having a very, very good day today. Yeah, it's trading up at least, right now. It's way off of its highs, got over 70, almost to $71. But again, same sort of chart. You had this big move into this key support here, and then you've rallied, and now you've kind of pulled back. So a lot of times I look to say, okay, well, my downside stop is right at this low here, and I'm playing kind of a bullish retrace before my hope is that you make another move up. You could even potentially classify this as an inverse head and shoulders play. I'll draw it in for those of you guys that are watching here. So you could make a case that here's your shoulder, here's your head, and maybe this is creating a right shoulder with your neckline right there. So, just it's a way to manage your risk, which is basically this low. Anything a move below this, you would exit the trade. But if it does play out, I mean, you could have significant upside, maybe to $100 from here, which is a potential nice little gain.
Yeah, so a name I've been watching in the kind of same space, or at least in the same regard, is that it got, it made a move up, but then got drawn back down, and I'm now looking at it again as Netflix.
Yeah.
I believe now back down to the 350. Yeah, almost 350 on the dot right now. I mean, we saw this get all the way up to, let's see, highs of almost 400. I mean, this was $400 like a week ago, and it's back
Yeah.
down to 350 right now. So I think,
I like that too, actually, because again, what I love about these type of trades is that you have a very defined risk assessment, right? So you basically know that this is your play, right? This is your level that you want to be careful of. You don't want it to get below here. But again, you're only talking now maybe risking about 20, 25 bucks to the downside. And if it goes even just back to this high of around 400, you're making basically 50 bucks. So risk 25 to make 50. I like that risk reward.
yeah, and I think that's great. Like you said, anytime you have that defined level as your stop, as you're out, it becomes a very simple trade, right? You get in and you say, all right, this is either going to move higher, and you set a price target, and it looks like you have it right there, or it hits my stop and I'm out, and then you lose, whatever percent that is on that trade for this, something like, 5% or something small, for a potential. So I like trades like that where you have a very defined out.
Me too. Versus shorting natural gas, which is just off on the races, or like you said, BMY, which just seems like it's going up forever, where you don't really have. I mean, you have that trend line I showed you guys, but for the most part, it seems like the shooting kind of rocket ship, where it's very hard to quantify. Well, where's your exit point?
Yeah, and I mean, and then it's like it sounded like for BMY at least you had a kind of a price target in mind. You said if it got down to that $70 level, but I find a lot of times if I'm shorting something that it's like harder for me to sometimes pick price targets to the downside than the upside.
Yeah, I agree with that. Absolutely. So yeah, there's some good opportunities out there. I think as long as we continue to see this volatile market, which now that the Fed is taking away the drugs, right, via quantitative easing and all this mortgage buying and all that stuff, I think the volatility is only going to get better, which is great for shorter term swing traders, right? It's not so good for long term investors, as they are along for this kind of crazy wild ride. But this short term swing trading is awesome right now.
Yeah, I couldn't agree more. Yeah, I've got a few kind of like active swing trades out there. I'm actually looking at some Netflix contracts right now to see if I like any of the call contracts that expire next week or the week after.
I try not to let this happen to me, but sometimes I just can't help it. If I see someone that I perceive to know more about an industry or a business or a company, and I see comments from them out in the wild, those comments tend to like plant seeds in my brain, right? I saw a comment from Jason Kilar, who up until like last week, I think, was the head of Warner Media. He got pushed out with the spinoff and the merger with Discovery, but he was overseeing HBO Max. And I don't know where he made these comments, but he made a comment about it's obvious to him that Netflix is going to offer an ad-supported tier at some point in the near future. And if they were to do that, you're talking about the size of the pie increasing dramatically, because according to Jason, and he saw this with HBO Max, is people are more willing to pay less money for an ad-supported tier. So like if Netflix is whatever, like $9 a month now for the basic tier, maybe you charge $6 a month and you get Netflix with ads. More people will do that. And so if Netflix does offer this ad-supported tier, it all of a sudden breaks it moves the potentially, right? Because there are just more people that are willing to pay. So I saw that comment this morning, and now I can't get it out of my head.
Yeah, and I'm still, honestly, I think I mentioned this last time, and we were kind of discussing how it kind of made sense, but I'm still stuck on the potential that at some point Netflix is going to look to swallow up Paramount Global, which used to be Viacom last time I was on with you guys.
Yeah.
We talked about this, but I just, Netflix is at a point, it seems, where they're like, okay, well, our growth is slowing, so where do we find new growth? And I love the aspect of bringing in like sports and live sports and stuff like that. And with CBS and the NCAA tournament and football, I mean, you could just, for such a small amount of money that would be instantly accretive to their earnings, they could swallow up a Paramount or something like that very easily.
in some sort of live sports on the program. But yeah, man, it's just been a crazy market. It sounds like, you know, kind of more the same, trying to find a few names you like short, a few names you like long, because at this point you just got to be nimble, right? Every day it seems like the market wants to do something different. Oh, let's see, we're looking at Bitcoin now.
Yeah, I threw up Bitcoin just because I'm sure there are lots of people that are looking for it here. But this is a great one here, folks. I mean, you know, I actually was short from this upper level, and then I just yesterday flipped it into a long on this area right here.
Oh, wow.
Really good support right here at 40. Now, it's only a short-term trade. I'm only looking for like 43, 44,000 on the upside. But I really like, you know, you've had this great trading range on Bitcoin here. If you're someone who just holds, you've basically made nothing since January. But if you can trade these ups and downs, these levels, I mean, it's been fantastic.
Trade the range. Trade the range.
Works. Find that channel.
Yeah.
Yeah.
It works till it doesn't.
All right, Gareth. Well, we got to get you back on soon as we get more developments in this. I mean, who knows? Like, we got CPI data today. By next month, we could be talking about something completely different, you know, in this, you know, who knows if it's going to be another war, more COVID, inflation. It's always something, though.
Always something. Thank you guys for having me on. I really appreciate it.
Of course, Gareth. Always a pleasure to get you on.
Take care.
All right. Let's talk inflation. Let's talk CPI for a second.
Well, okay. Before we do that, though,
okay,
I want to talk about.
Oh, yesterday.
What?
We got to talk about your field trip, your adventure.
Oh yeah, I mean that plays into
Aaron's
inflation.
great adventure.
That plays into inflation.
Aaron's banned from the Detroit Economic Club, I heard.
No, I met the president. He seemed to like me.
Okay.
I think.
All right. What do you want to talk about?
I just wanted to talk about Netflix for like 2 more minutes because it was on my mind after you brought it up. Fine. So I had actually not heard that, but it makes too much sense. Like I have
too much sense.
Brannard's on right now. I have
Well, Brannard, yeah, but she. And that's that, and that the cat's out of the bag now. So I'm not sure what else she can say.
So I have the Hulu that has ads, and I gotta tell you, I don't really mind it. If I'm watching a show,
I think I do too. Honestly.
If I'm watching a show and they play like the 90 seconds of commercials, it's like I pull out my phone, I read a couple tweets. Next thing I know, the commercial's over, and so it makes all too much sense. Like, why would Netflix like base subscription now is something like $15 or something crazy?
I don't know the number.
But the point still
I don't pay for Netflix. I don't know the number.
$5 a month or whatever for Netflix with ads. But what I wanted to talk about is this also plays into maybe giving us some reason as to why. So you have the Nielsen ratings for TV shows and movies that are on TV, but we never really had ratings for streaming shows and streaming movies.
No, I don't know if we're ever gonna.
Well, we do now.
What do you mean?
Well, in some regard, I mean, Netflix puts out now its most watched, its streaming numbers.
Yeah, they do.
And that was a lot of people that cover the space. A lot of analysts thought maybe this is you know, kind of foreshadowing the future, saying, "Hey, we're putting this numbers out there because now it puts pressure on our competitors. It's put pressures on Amazon, on Hulu to put out their streaming numbers and to say, here's how many minutes we have people watching this show, so now we can go to advertisers
perhaps
and shop that." So I think that would make sense as maybe why 6 months ago or so Netflix, who has famously been for 5 years very hush hush on its numbers, on its ratings.
More than 5 years, I would say. Oh,
well, I was just saying since
is Brenner taking us down here?
I was just saying since the streaming became kind of more mainstream.
She's taking us down.
What the hell happened?
Twice.
Isn't she was the one that was up against Powell to become the head, right?
Yeah, I believe so. Shawsan, did I get that right in the chat? Threw a few comments in there. She was the dove that went hawkish on us, right? Last week.
I think she's generally pretty dovish.
Right. That's why the comments last week were caught the market for a loop. Yeah, I mean, we're at the lows of the day here. Give us a few more give us another hour perhaps, and we could end up giving back all the gains from this morning's CPI print, at least on the SPY.
Yeah, this analysis I'm looking at that ranks the Fed heads on their hawkishness versus dovishness has Brainerd as the second most dovish.
Right. And that again,
what's she saying though? Can we get some direct quotes?
Let's go to the news feed in Benzinga Pro. Oh my gosh, I'm getting so many headlines. I'm gonna have to search here. How do you spell Brainerd?
B-R. It's like brain. B-R-A-I-N.
My news feed right now, but that's not acceptable.
How about I go to Twitter?
Not acceptable, frankly.
Brainerd, extendo Russia war will create higher economic risks. China's zero COVID policy has potential to lengthen out supply chain constraints. Russian war, very important contributor to inflation. Says CPI data showed notable core inflation slowdown. That seems good. There we go. Got some good things going on.
Qs have given back on nearly all of today's gains from this morning.
Who's Nick?
I don't know. Sorry, I'm just doing two things at once here. Okay, so Qs. Yeah, Jesus. All right. That was fade. If you ain't fading, you ain't trading. Because maybe it took a little while, but we have given back nearly all. We're at this point, we're going to give back all of the gains from this morning's pop. And the reason we were up in the first place, remember, was because the bad news wasn't as bad as some people thought it could be, which is not a very good reason to be up in the first place, in my opinion. But man.
Yeah, Chason? I don't know how you say that. I'll have to go back and watch this interview later. It looks like, Wall Street Journal, Nick Tiramos is the one doing the interview, so I'll have to go check that out. But yeah, I mean, guys, I don't know. It seems like maybe it's just kind of one of those things where they want to make sure they're not over promising and under delivering, so they kind of want to set the bar lower. Like we saw, what's her name, Jen Psaki, talk. Had Spencer and I were like, oh my god, if she's saying it's bad, it's going to be like 12% or something insane. Then it ended up only being 8.5%. So then I saw it and I was like, oh, that's not so bad. And then I realized, like, oh, she kind of set me up to where I set my expectations to be very high, and then I was pleasantly surprised. Instead of, had she said like, oh, we're inflation's looking good, and then it comes in at 8.5%, you're like, what the hell? It looks like MD. I found the interview going live on Wall Street Journal's Twitter, but
here. I'll drop it in the chat. I have the link. If you want to leave us and watch them, don't do that.
We don't care. Go.
No, don't. I mean,
fly, little birdies. Fly.
We do care.
We do care. I hope you stay. I hope you come back if you do leave. Did you know? Fun fact, Spencer.
What?
On this date, in 1976.
Oh wait, 1976. Something to do with Apple.
Yeah.
Was it incorporated?
No.
Okay.
This date in 1976, what? Ronald Wayne, third lesser-known co-founder of Apple behind Steve Jobs and Steve Wozniak, sold 10% of the company, 10% of Apple, for $800. Yep, he sold 10% of the most valuable company in the world for what I pay in rent, about
$800.
So.
Yeah, that's a doozy right there.
Yeah.
You know what today also is?
Worth about $280 billion.
Wait, since we're doing historical things, and then we have to bring on our next guest here in a second, but since we're doing anniversaries, today is the let me do quick math in my head. What year? 26th anniversary? 26th anniversary.
Okay,
Yes.
wait. Let me do some quick math.
There's a tech IPO.
All right, 26 years. So we're looking at 1996.
Yes.
We're looking at 1996,
Yeah.
April 12th, Amazon IPOs.
Close.
Google. Yahoo.
Yes. Wow. Yahoo. Yahoo IPO'd on this day 26 years ago.
Wow.
Remember when Yahoo could have bought Google for like $1 million? Not $1 million, but it was something
Crazy.
small like
That's got to be one of the worst business decisions of all time to not buy
perhaps.
Google. Conversely, Google buying YouTube
Oh, what a steal.
was a steal. They bought YouTube for something cheap. I got to find the chart, but there was a chart of like the different big tech like M&As over the past like 20 years, and it just showed kind of the valuations, and YouTube was like
1.65 billion is what they paid.
Yeah, it was like
What a
way lower
steal.
than like some of these companies have paid like 10 billion for a company that like you've never even heard of anymore. So the fact that Google paid like I wonder what the market cap of YouTube alone would be right now. I would venture to say like in the
More than most companies. Let's say that.
all right.
Let's say that. All right, let's bring on our guest here. Let's pivot this conversation to the one place where you can escape inflation. I think.
Yeah.
Man, no,
I mean,
no.
think about it. To get up to space, you got to
All right,
buy like
all right.
metal
Those are
and
bad.
commodities.
All right.
Well, who knows?
Space. Ryan Duffy, managing editor of Payload Space. I very much want to know what specific aspects of space get him most excited right now. He knows way more about the topic than we do, so let's bring him on the show and talk some space.
Hey guys, how's it going? Can you hear me
Hey,
all
Ryan.
right?
We hear you and we see you. How's it going? today?
Awesome. Well, first off, not to be a bummer, but unfortunately, space is also affected by inflation.
Well,
down on
I thought like the astronauts wouldn't be experiencing it, but I guess to get to his point, in order to get up there, it will cost more money in the first place.
Well, maybe
or to come down.
Yeah.
So-
Like what's
Yeah.
a standard MRE probably goes for what? Like $5 up in space? Now it's probably like $750.
That's it.
Yeah, so there's that. There's the cargo, and then at least in the Western world, your main ride to space is going to be SpaceX, and they recently hiked the prices for all of their launches, as well as the kind of nascent consumer-facing aspect of their business, which is Starlink. So they hiked prices for the dishes and the subscription and whatnot.
And also the fuel will cost more. So yeah, okay, fine. I was trying to throw a silver lining out there that just got soundly rejected.
Yeah. Sorry to come on and immediately. shoot
No,
that.
no.
That's okay.
So Ryan, why don't you start by just explaining to our audience kind of what Payload is and what y'all are doing right now?
Yeah, so we are a media startup, and we are focused on the business and policy of space. So what does that mean? In practice, right now, we have a daily newsletter, which I would say is about 66% focused on the space industry, and then the rest focused on civil civil space, which is NASA and other civilian space programs, and then military space, which has been definitely of increased focus in recent months. But I would say that Payload is more of a B2B publication, B2G too, I guess, because we are also focused on the government side, than a kind of consumer-oriented newsletter that you might see. There, we're in the midst of a newsletter boom, and my former employer, Morning Brew, is they straddle both, but definitely the flagship product that most people are familiar with is more consumer focused. But anyways, we're writing for a space professional set, I would say, and that does definitely include space enthusiasts, and of course, as it pertains to this show, and it's pretty relevant, it includes a lot of space investors, from VCs to institutions to retail.
Yeah. So Ryan, what I want to know here is just from the business of space standpoint, when we look at like ways to invest in space, ways for the average investor, there's satellite companies, there's rocket companies, there's companies that are ancillary to space. What within that realm gets you the most excited right now?
It's a good question. So I think that any space geek or sci-fi fan or anything is going to be really, really excited by launch. But SpaceX is a very, very has a huge first mover advantage. And then when you look at there are a couple other publicly traded launch companies now that have successfully made it to orbit. But when you look at the private markets and the startup side, I don't even know what the latest number is, but it's something like 100 to 120 to 130 privately funded companies that are trying to develop a orbital launch vehicle. So it's very competitive. The margins are super thin. So even though launch is kind of the most exciting, entertaining spectacle as it relates to the space, it's a tough nut to crack these days. So I think that what I'm really interested in and excited by, and it's kind of top of mind these days, but it's really it's a sector called EO, and it stands for Earth Observation. And I think that you also frequently hear it described as remote sensing, but EO is using all different types of sensors to really understand what is going on around the Earth and across the surface of the Earth. When you have a company like Planet, which went public late last year,
we know.
They prominently tout that they take a scan of the entire surface of the planet once a day. So I think that what I'm really there are tons of EO companies that got out the gates via SPAC mostly, and then there are also some companies that have been around for a little bit longer. But I am I'm excited with that sector, not necessarily looking at year-to-date returns, or especially since they went public via reverse merger, but just the applications and the analytics that can be built upon sort of this primitive, which is all of this data. And I still think it's pretty early innings for that. And there has certainly been, in my view, a coming of age moment, or as one of the CEOs described to me last week, the internet moment for space. And it's not for a good reason, and it's certainly, we wish this wasn't the case, but the conflict in the war in Ukraine has really shown the power of a lot of these commercial satellite imagery providers. Because when you think about it, a lot of these capabilities, down to tracking fires in Mariupol, and that is a NASA government data set, but a lot of the imagery that is coming out and that is top-fold in newspapers and on TVs, that's from commercial providers, and that's definitely something that is relatively new.
So what other names do we need to know? Because we know Planet, we've had Planet on the show before, but what other names in the EO space do we need to know, you think?
Okay, so I have my cheat sheet over here, which is what I'm looking at.
Yeah.
So there's Maxar, which is doing a lot of this work, and I mean, there's Planet, obviously. There is there's Satellogic, which is a newly public company. There's Spire, which does less so imagery and more signals that aircraft and ships are putting off. There's Black Sky, and I mean there's quite a few. This has been a larger category of when you look at space SPACs, the sort of the EO, and a new term that you'll probably hear with some of the more recent companies is SAR, which is short for synthetic aperture. I still get tripped up on it, but basically all of these new modalities that involve tracking some sort of either just taking pictures and understanding how surface is changing, tracking ships, And then there's so many other, there are probably over 100 applications. I couldn't rattle them off right here, but there are probably 100 different applications for, specific Earth use cases that you would tap satellite imagery or data from, ranging from, insurance to finance to energy to national security, of course, and ESG. The list goes on and on and on.
Pivoting away from that space for a second here, because you mentioned SpaceX before. What are the odds you think SpaceX ever goes public?
I don't know. I think that, it's ironic because one of the biggest stories right now is the future of Twitter as it relates to its new biggest shareholder. And I think that Elon has been pretty open in his comments about the short termism, or just basically you have to answer to shareholders. And when you're a company like SpaceX, which is very open about its very explicit intent to make life multiplanetary and everything, if that runs up against your quarterly results, I don't know. I don't know if that is a risk, and just sort of ceding some degree of control that SpaceX management, specifically Elon, wants to take. Now, you have seen rumors about Starlink, which is that consumer broadband low Earth orbit internet service that most folks are familiar with. Again, the profile of Starlink has been raised quite a bit because of all the terminals that have been shipped into Ukraine to keep folks online there. There have been rumors about that being spun out and taking Starlink public. I don't know how much weight I would put in that, but I hope that it doesn't happen in like the next 6 months, so that I have to eat my words. But
well, it is interesting too, because SpaceX does so many contracts with the government that a lot of times when you do have publicly traded companies that the company's revenues are dependent on like government contracts, it makes for things like quarterly earnings, like it's very, like, maybe it's just easier if you're doing that much work with the government and stuff to just we'll just stay private.
Yeah. Well, that it might be a bit of a narrative violation in a way, because there is, at Payload, we take the view that there is this new commercial space age, if you will, upon us. But any of these companies, no matter how you slice it, the government and military revenues are still, that's still what's
it's not a lot of customers out there spending $500,000 on Virgin Galactic tourism flights. But so just real quick, Ryan, what and it looked like Spencer.
I want to ask about that company specifically.
All right, so we'll hold off on the we'll do that next.
Okay.
I just want to ask real quick on the since you cover the government kind of policy side space too, do you see the government? I don't really want to say relying, but I guess especially for something like launching, like relying on SpaceX more and more, or is the government actively, NASA trying to actively like, oh, look at what SpaceX is doing, we could do that, or are they just becoming more and more entrenched with relying on SpaceX to do certain things in space?
I would describe it specifically as it pertains to NASA. I would describe it as a handoff. So NASA has these stated aims of commercializing or handing off a lot of functions in low Earth orbit to the private sector. So you see that with commercial crew, which is when SpaceX takes astronauts up to the ISS, and you see it with cargo, which is when SpaceX and others take, resupply the space station. And in the coming years, this involves Axiom, which is definitely a startup to watch that's based in Houston. They have 4 private astronauts at the ISS right now as we're talking. But there's also commercial LEO destinations, which in short is basically the effort to fund privately operated and owned orbital outposts that will eventually replace the ISS when it's decommissioned and deorbited.
Got it. All right, now on to the Virgin Galactic.
I just would like, before I let you run here, Ryan, just like your take on Virgin Galactic. I've long held the belief that I can't imagine that this company does well. Frankly, I don't know how many people are lining up to spend whatever it is, $250,000 to go to space for a few minutes, but I mean, I would just like your take. They benefited from being the first, at least from the public markets point of view. They were the first pure play in there. That got a lot of buzz. Obviously, it's Richard Branson, but like I would love your take on that company and its prospects.
Yeah, so they're in the midst of a refurbishment of their VSS Unity spaceplane and the Eve mothership. I believe that's what it's called. They haven't really been able to, start. They haven't really been able to go to market and start recognizing a lot of those ticket sales. I don't know. Virgin's been around for a really long time. They've spent quite a lot on development, and I think we really need to wait and see once this refurbishment process is complete, and once they are able to start flying paying customers, what their turnaround times, flight rates, cadence, all of that, what that looks like. And it is interesting just looking at the market caps on my cheat sheet here.
Yeah,
Virgin Orbit is pretty close to Virgin Galactic, and I would probably be a little bit more confident. This is not financial advice, I'm just Payload's editor, but I think Virgin Orbit is. I think that it has some residual sort of attention from folks beyond the space bubble because of that Virgin name, because of its association with Virgin Galactic, but. That is actually, I know I was saying that launch is really crowded, and it literally is rocket science. So it's a tough nut to crack. But Virgin Orbit is pretty unique in the sense that it's an air launched system, and that gives them some flexibility in terms of where around the world they can launch from. And you've seen a lot of interest in recent months from governments around the world who want their own domestic launch capability and would be willing to pay a premium for that over launching from someone else's soil.
Ryan Duffy is the managing editor of Payload Space, payloadspace.com. Seriously, I'm all about it. Aaron and I both believe that the future of media is in finding niche publications that are super hardcore on specific topics. You are super hardcore on space and the business of space. So we're big fans of yours. Keep on doing what you're doing. Thanks for coming on Benzinga Live today.
Thanks a bunch, y'all. Have a good one.
Thank you, Ryan. Talk soon.
Right. Guys, as we were talking to Ryan just there, I mean, I was keeping one eye as best I could on the overall market because we did for the moment stop going down. So that's something, right? Here's the SPY today. I would love to get our next guest thoughts on this, actually. Let's bring Robert Roy on now.
Let's do it, because, Mr. Robert Roy.
I'm imagining he has opinions.
From the great state. Can you say that about New Jersey? The great state?
He's in New York.
Oh.
He's on Long Island, I think. I don't know. Let's ask him. Rob, you're on Long Island, right?
Hey guys, I am on Long Island. How you doing? It's close to Jersey, but
that's a big faux pas there, though. You can't.
I know you can't.
That's
can't
a major
tell a New York guy that he's from New
regional
Jersey.
faux pas.
But I said I gave New Jersey some shade. I said we can't even call it a great state. So now Rob Roy's like, see, he gets it. New York's better. So hopefully we're on.
That's a faux pas.
Hopefully we're on good terms.
People around these parts are sensitive about where they're from. So.
Absolutely. We're just all misunderstood here. That's what it is. We don't have a problem with anybody. We're just misunderstood.
That's it. That's it, Rob. All right, let's bring up your screen here and let's talk about this market. We have, as I said, given back nearly all of the gains from this morning's CPI print. Now, first, what was your take on the rally on that number? The number that was bad, but not epic worst case scenario bad, and therefore we're bullish for at least a couple hours this morning.
I was teaching this morning when this came out. We started at 8:30, and we're watching the announcement come out. And I'm like, all right, it's bad, but not that bad. I get it, but it's still bad.
I know.
As the number goes. So we had to run up that quick little pullback and then that hop up there. So in essence, from a technical standpoint, we've put in a head and shoulders pattern on the ES, right? So we've got the left shoulder, the head, and then the right shoulder. We have a lower neckline in here. Well, actually, it's probably pretty even right there. We have a lower neckline, which was broken. And if we actually do it with real lines, let's move it up a little bit. You could see that this current candle right now is retesting it, right? So we're looking to see if we're going to get that failure off of that with that head and shoulders. I do like that the right shoulder is tilted down a little bit. And with the neckline, the center line here being equal, I'm good with that. But I was surprised to see the run at all from it. I think people want the market to go up, whether there's a reason for it or not, and it's just that push making it happen.
Well, that push has run out of push now, Rob.
It absolutely has. It has. So that's what we're looking right now. We're looking at ES. Is it going to fail off of this horizontal line? If so, we've got a nice downward projection. If you look at, this is all the overnight. Right, this is from 6 p.m. last evening, which is where the ES opens up, right? But look at where this neckline lies. Go back to yesterday, right? We have 1, 2, 3, 4, 5 major hits on that 44.32, 44.33, we'll call it line.
Yeah,
in there. So testing it very strongly from the top side. Now the question is, how is it going to test and does it fail off the bottom side? I'd really like to see it close near it, but we'll see where it goes. This is a 5-minute chart we're looking at right now on ES. But, when you look at S&P 500, it's pretty straightforward, right? We're in a bearish bias before today opened up. We're in a bearish bias. This is today's candle. We stretched up towards our moving average collection that's up there, the 8 and 21 moving averages, and we've failed. 44.24 is a support level based on our Fibonacci's. It's a 382, not the strongest fib line, but still a very important level for us, right? So are we going to move our way down to there? It looks like the opportunity for that movement is very likely. Whether it's today or tomorrow, I would expect you come down and retest that level.
All right. That's for the that's for the S&P. What about the NASDAQ?
Let's see.
Because the NASDAQ is ahead of the game in terms of giving back its gains.
They were rocking this morning as well. So much ahead of where the S&P, 100 points, the Dow was up 120 and the NASDAQ was up 200, right? So we're still looking at, here was that 20% correction down to bear market, right down into this level. Let's get a little bigger picture in there, okay? So we had that pullback going on in there. And when you look, moving averages are slightly up higher. So we've broken further away. So we don't have as clear of a condition there. It looks like for some reason my fibs got taken off here. So let me put them back. And that's part of the problem when you teach as much as I do. Examples tend to mess things up. Okay, there we go. So 13,756 is resistance. 13,806, 807 is the 8 moving average. So, we're about 50 points apart between the moving average and the fib line. So once again, I would anticipate the move up on that. Let me just delete that out of there. I would anticipate the move up, and the failure is what I would be looking for. I know there were some students that were looking to take trades on Qs today, and we talked about these types of pullbacks. If we look at the Qs, the ETF, right? I mean, we went right into that level and failed, and that's exactly what we were looking for. And the really cool thing is when I've got them at some of these students now at a point, some of these traders, that they're not just telling me, look at Microsoft, look at the Qs. I'm having them give me a reason. What are you trying to do? And what they're actually what's happening is they're articulating a trading plan without even realizing it. They know exactly what they're going to do when the market opens or when their trigger is hit for taking the entry.
Yep. So what else have we traded here today?
Today was a busy day. I got 4 of them off today.
Oh, wow.
Yeah.
What do we got?
I'm trying to type without my fat fingers. So the very first one was Tesla. So I did 2 trades on Tesla today. Actually, it's probably easier to show it here on TradeStation just because it's, I think I've got some things marked up on there. So we had a nice gap up on Tesla this morning. As we rolled over, I was looking for a half of a gap fill. We didn't get it, and we whipped back to the upside. So on that Tesla trade, it cost me about $2.50 on that trade when I got stopped out. Okay. The gap fill didn't work. I waited for it to make its move up to this fib line, which gets transferred off of the daily chart. So right here, this 10-16-33 level. We moved up into that level and we failed, but it's not just a failure. And Spencer, I know sometimes I may sound like a broken record, but man, this thing works and I don't want to change anything that's working for me. So we closed below that fib line. We came back up and retested and failed. And there was the entry into the trade on that failure. Now we did it. It was actually in this candle that it happened on a 1-minute chart was the entry, but we got the push, the break, the retest and the fail. And that's always the entry. Because folks, if you take that entry and you're wrong, your stop is here. If you wait for the stock to get down here and take that entry, your stop is still up here. Nothing changes on your stop. You don't change the stop based on how much money you're willing to risk.
Wait. Show me that retest again. Sorry, we're looking at the purple line.
Sure. So I was just using it as an example. So you know what? Let's do it like this. Let me take you into the 1-minute chart. I'm just going to have to scroll it down a little. All right, here we go. So on the 1-minute chart on Tesla, and let's grab a color that's not red so it's easier to see. So we pushed right through here. So no retest, right, Spencer? Nothing retested at that point. Let me zoom in a little bit more for you. Just trying to make it as big as possible so it's easiest to see.
Yep. Here, you know what? I'll actually go see it. This will probably make it bigger.
Okay.
Or that.
So this was the original break. Nothing happened there. We closed below on this 1-minute candle, Spencer, that big candle.
Yes.
And this next candle came back and retested and failed. On that failure was the entry into the trade. Now you took a little bit of heat up here, but we were not stopped out.
No kidding, man. I mean, you said your stop is the high of those 2 candles prior. Yeah, you almost got stopped out. How close did you get there?
So actually, that's not my stop. Not on this setup. My stop on this
is it some fib line.
My stop on this was, I've already deleted the lines because I don't need them anymore.
Yep.
10.27 was my stop.
Okay.
So from an intraday move, we got to a high here, which didn't matter. We got to a high here of 10.21. This gave us a high of 10.20. All right. So I still had $7 or $8 more left to the upside.
Okay.
In there. Right. But that's the entry into the setup. Right. This was the one that worked for me. It was about 10.05, 10.07, somewhere around there is where we got in. 21 and jingle was the entry price on the option. And as we pulled down, we did phenomenal. Right? We got to 11:30-ish, 11:35, right in here, I think it was. Nope, that wasn't it. Let's see. We're on a 1-minute chart. Sorry, I'm looking at my 5. So I'm like, no, it's not the candle. What's going on? I've got 11:35 as my exit time. So let's see what happened. We broke here, 10:50. We kept pushing down. We got up here to the 11:30. I got one close above my moving averages there, Spencer. Once I got the second one, I was out of the trade. Right. And then at that point, it's lunch. It's flat. You've heard me say this before. I don't execute trades at lunch. And you get these blah type moves regularly at lunchtime. It goes sideways. It just gives us nothing to work with. So I'm happy with being out of that trade. You know, we got in at 21 1 and change. We got out 29 and change. So it was a decent move on Tesla today. So the first one went against us. That's fine. We had a very small risk in the trade. Second one brought in a nice profit.
Okay.
All right. From there, we had the same type of setups. I just won't go into as much detail on them so we don't spend the whole time on these. But Amazon was another one. And ironically, Amazon, the highest price stock, the highest price option, gave me the lowest rate of return today. So same type of scenario. We got a gap up today, right, on Amazon. We pulled back to that 30.46 level and we got a bounce. So we took that bounce off the 30.46. We were in and out of that trade in about 20 minutes. It was a great little profit. We got stopped out. Same thing around our moving averages. We broke the moving averages. We got taken out of the trade. So that was number 3. Do you want me to do any more detail on it?
And wait, hon. And so far we're talking Tesla, we're talking Amazon. What was the first one?
Tesla, and Amazon.
Tesla. Okay, right. 2 Teslas in the Amazon.
2 Teslas and Amazon.
You said there was 4 today. So what was the last one?
NVIDIA, which I am just a huge fan of. So you got to look at the overall pattern, right? That's helping me decide what we're doing as far as direction goes. As we look, we have this nice run up on the fibs. We've had good, strong pullbacks. I love the pullback we've had here. And the recent pattern that's happened in here is what I call a bearish thrusting pattern. It's just very strong bearish move, very little deviation from a bearish candle. Well, the gap down that came yesterday on the open was very powerful, but a tough trade to take because the expectation of a retest of a Fibonacci level is very hard to believe it's going to happen. And if it does, it's always a guessing game of, is it going to break because it was an overreaction, or are we going to get a continuation? Today is a different story. We closed down here, from yesterday, and opened right down here, and we opened right at that fib line. Our opening price was right around 225.25 ish. We're at 225.65 there. So we were only about 30 cents away from that fib line. We stretched up a little bit. So it's you climb the highest tree in the forest, in the jungle. You pop your head above the top of the trees and you look and go, man, that's pretty cool up here. All right, I've seen it, nothing else. And you go right back down. And that's exactly what happened today. Get the fail, get the retest, get the drop, take the entry on the trade. We, again, took the exit on NVIDIA about 11:30-ish. We got in about 10. We got out about 11:30. It was a decent rate of return on NVIDIA. Well, NVIDIA was the highest rate of return, 52%. Amazon was only 29. Only. And I'm not saying like a wise guy. In comparison, you would look for a bigger percentage on an Amazon with bigger moves, but you got bigger dollars invested in the trade.
Right.
So we got 3 positive, 1 that went against us today. So I'm happy with the results overall.
All right, let's take some questions from the chat now. If anyone has anything for any setups that they're eyeing, they want Rob's take on, for the short term or for the intermediate term, drop your tickets for us in the chat. We've got a couple minutes left with Rob here. He joins us every other week. By the way, the link on the screen, tradinglikeaboss.com, will get you more Rob Roy. If you want more Rob Roy in your life, check that out. Let's do this, Rob. Let's take a look at, because we're heading into earnings season now, and that can create some volatility. So let's go a few weeks out here. Let's look at like Apple, because Apple reports, I believe it's 2 weeks from tomorrow. I think it's 2 weeks from tomorrow. Let me confirm that for you right now.
Oh, yeah, I don't have it. We're not tracking Apple any longer on our list.
Oh, you're not? Wait, when did you take Apple off?
Apple came off, and this is ironically, this is Apple right here. I did a training last night on gaps. On gap fills, that first trade I showed on Tesla. And this was, just in the last 20 days, we've had 4 amazing gap and gap fill that would have produced really nice income had you taken all of them. Not huge. I'm not looking for a $10 gap, but you really got to find the sweet spot. Actually, Spencer, the data that we use for gathering this comes from you guys. You provide the data for us on the gap statistics that we have. And Luke was the one that had put something out there that said there's nobody that's doing anything like this in the market as far as how we decipher a good stock to take a gap trade versus a bad one. Gives a very high probability of being right, at least a 70%. We won't really take much underneath that. But Apple's been off our list now for, 6 or 7 months.
Oh, Jeez.
It just, when I say off our list, I still trade it regularly, but the main
That's what I thought. I was like, I could have sworn this is because you only trade like a dozen stocks, but I could have sworn this is one of them.
Yeah, it's 20 is the number.
Okay.
So let's say it this way: there's 20 on my list. I probably trade 8 or 9 of them on a regular basis.
Yeah.
The other ones are, it's set up. You know, the lower price stocks. I like PayPal. Don't get me wrong. I like some of the lower price positions like that. But
Yeah.
trading in Netflix, trading in Nvidia, you know, even United Healthcare, which is a couple $100 at this point, just gives a little bit more movement, a little bit more excitement. And I'm not looking for the rush, but I'm not looking to watch paint dry either. Right. So when we look at Apple, it's in a bearish bias right now. It's not true bear, but it is a bearish bias. As far as earnings go, unconfirmed, you'd want to check the date out, but it's right out here about the 25th or so. I think that is 28th of April.
Yes, 28th.
28th. Okay.
Yes.
So, I mean, as far as what their earnings are, I don't know. Because
no. Obviously, you don't know. I'm not asking that. I'm just asking, like, as a play to run up in, not even as a run up, just as a play into the report, right? So, like, the end date here is the 28th or the 27th, right?
Correct. 27th. So here's the way that I look at earnings, Spencer. What happens leading into earnings? The market increases the premium in the options price. Right, so they jack the options up the closer you get. We used to do a trade called the chicken trade, which in essence was a strangle. We bought a call, we bought a put, a little bit out of the money on each side, and we would wait for an explosive move in one direction or the other. And when it did, if it ran up, your puts would expire worthless. You spent $2 on them. You spent $2 on the calls. They would increase. So you had $4 in the trade, but your calls would go to $7. So you made money on it. Market makers figured that out. And they said, no, you can't do that anymore. We are watching this trade 2-3 weeks sometimes in advance. You start to see premiums and the vols increase on the options. So for me, I like to wait for the market maker to try to punish the trader after the announcement comes out. Okay. And what I mean by that is now they just took that high vol option that you paid for, $8, and it was really only fair valued at $6. They drop it down to $5. Right? Because now they're punishing you. You want to dance? You got to dance with me. I'm the 800-pound gorilla, right? You're getting out of that trade. I'm the one that's buying that premium, and they can't leave it there forever. When you get that bounce that takes place, whether it's a call or a put, breaking up or down, they're going to put that option back where it belongs in price, right? So I tend to trade them either after the announcement, which you could do with almost every stock. That announces. I like the ones that announce at night. I really don't like during or before market. And if you are trading any of the major NASDAQ stocks, the Apples, the Amazons of the world, then trading these, because all of them announce after the market closes, trading the NQ, which is the NASDAQ futures, is really the way to do it, because the futures will trade right up until 5 o'clock. So
That's true.
You've got a lot of opportunity to take advantage of those positions there. So bless you.
Thank you. Wait, we have a few tickers in the chat here.
Okay.
Let's go with sorry. Bank America. We talked about Bank America earlier in the show, but let's get your take.
All right. So we've got to draw. I haven't traded this one in a bit. We've got to draw a new Fibonacci on it. So let's do that first. The fibs have expired that we had on there. Got a new one that's a better one to use. Okay, good. So first thing I see on Bank of America is we have this amazing H pattern, right? Think of the letter H. Here it is. Now, some of you are going to look at that and say, Rob, that's an ugly H. You may consider that to be ugly. I think it's the prettiest letter in the alphabet. It's also the most profitable. Off of this 50 or 618 is a standard move that we get from those, right? At this point, we've pulled back. We're at $38, 38, 39, 40, 41, 3. All right, we need to split these levels in half. I need what's called a Fibit. And guys, if you go to that page that Spencer was talking about, that tradinglikeaboss.com, that's up on the screen. There's a free Fibonacci training up there. It's a 3-part series. You get an email each day, some exercises to do. You'll learn how to do exactly what I'm sharing with you here. So right now, Bank of America, Spencer, we look at it, the last couple of days, 1 to 5 days, we've gone sideways. We've got nothing in there. Earnings are tight. And again, you got to confirm, but this shows the last update we have on Omega charts is 418.
Yeah,
so
it's
really,
it's Monday.
Is that it?
Yep, that's right. It's
Okay.
Monday. It's Monday, right?
Monday.
So
Got it.
yeah.
Oh, is it? Goodness gracious. This month is going too fast. When I see a candidate that's laying out like this, I'm going to walk away, because even a small push to the downside, I can't trust it, because we've had it here where it pushed down and snapped right back up. So I need to let this thing run a little bit. I would wait until after its earnings for anything personally. But overall, we have lower highs, and we're trying to see if we're going to put in that lower low off of this H fail that took place up here.
All right. Let's do a couple more. Let me try. Okay. The UN. This is going UNH from Quantum United Health. Been on a massive tear.
Absolutely.
I haven't looked at it today yet. How's it doing today?
It's pulled back.
Yeah.
So I even have a note that we need to redraw the Fibonacci's when ready. And I put this note on there last week, and we'll redraw off of this top after the pullback now. And I'll share with you what it looks like. But I normally do this in front of the students that we trade this with regularly. So we're going to go ahead and redraw the fibs from this swing low to this swing high. All right, we're going to pull that fib out of the way for now. Okay, so let's pull this back. We'll get a real clean view of what we're looking at. So we've got 531 to 549, 31, 41, 51, 20, 18. We don't need a fib in there. That level does not need to split. Okay, again, their earnings coming up. It shows on the 14th. And they are confirmed. This is one that we track on our list. I have my earnings dates in here. Right, United Healthcare is one of those.
Yep.
That we do track. So in an ideal world, I'd love to see United Healthcare get down a little bit closer. Actually, no. If it closed right where it is today, a little bit lower is okay. But if it closed where it is today, retest that 130.69 tomorrow and bounces. How much of a retest? I get this question all the time. Does it have to hit it exact? No. If it gets to 131, 131 and a half, just pull back. What I'm trying to do is shake out the bulls, Spencer. I want to get the bears rather. I want to pull it down a little bit, get the bears excited, get the bounce, and then the bears just start freaking out. They're exiting their trades, which is helping me jack price up a little bit. And we get that continuation of that bounce off it. We've got a confluence here with the 8 moving average, which gives us a lot of added strength. Now, all of this based on what? Based on the market. If the market is crashing down tomorrow, I'm probably going to be very cautious on taking a bounce off of a bullish level. But with the moving averages in the right order, pink on the top, green in the middle, brown on the bottom, 821.55, I like the setup a lot on United Healthcare.
Right. Yeah. I mean, at the end of the day, you could also just say, hey, buy dips on stocks in massive uptrends. And the stock is in a massive uptrend. It's never that easy, obviously, but
it is not.
Yeah,
right.
but that's a basic saying to apply here. Let's do one more, Rob. Let's do. Okay, only because there's news. I'd be curious to see if your chart's adjusted. But AT&T, let's take a look. See.
But they changed symbol on it now, correct?
No, AT&T is still AT&T. Okay, so your charts didn't adjust. Discovery is a new ticker now, but it's WBD. But AT&T the AT&T of today is now back to being the AT&T of old, which is it's a telecom company. They provide phone and internet services. That's what they do now, and they're out of the content game.
Right. So yesterday, I pulled AT&T up. They showed up on the news list yesterday.
Yep. And
the only thing I had was the options that expired this week. There were no other options showing on the TradeStation option chain at all.
Yeah, it's probably due to the spin-off. They had the options have to adjust, right? So
correct, because they would include some cash, I believe, and shares of the new company. So those options could have some wacky numbers in them. Look, see, so here we are. There's no bid, no ask. There was open interest, but you've got no volume on the options that expire next week. Same thing. How about further out? Okay, so we go further out. We're getting some back in November, but even that volume, we have some volume today on them, but some of the more recent ones, the weekly ones, it looks like we're getting nothing. On the monthlies, how about here? On the weeklies, it looks like we're getting no tradability at all just on the monthly. So I wonder if the weeklies are going to go away at this point. Yeah, and on the new symbol, there won't be enough to really chart it to say good or bad or indifferent.
Okay.
AT&T, I don't have the adjustment yet.
Okay. That was worth a shot.
Yeah.
All right. Robert Roy, guys, as you know, joins us every other Tuesday on Benzinga Live. His website, tradinglikeaboss.com, on the screen. Link also in the description. Again, check it out if you want more Robert Roy in your life. Mr. Roy, we appreciate your time as always. Have a great rest of your day, rest of your week, and we'll talk to you next time.
All right, Spencer, appreciate it. Thanks, everyone. Take care.
All right. Peace out, guys. All right. It is 1:16. We have yet to really talk about inflation in depth. So what I want to do right now is bring up the Bureau of Labor Statistics CPI report from this morning. This is the report that everybody was talking about, was looking at. And let's run through it here, Aaron. I want to run through it line by line. Not every single line, but most of the lines. Okay. So what I'm looking at here are two things, right? I'm looking at this column, right? Where my mouse is now. The March 2021 to March 2022 unadjusted percent change. That's the year-over-year change. And I'm looking at the month-over-month change of the column directly to the right, okay? So the first thing that I'm curious about, and I do this every single month, well, I have done it every single month for the past 7 months or so, is annual change, year-over-year change is more meaningful, but just out of sheer curiosity, what went down month-over-month? Right, we're in this inflationary environment where prices are rising. Did anything actually go down? Did costs of anything decline from February to March? And yes, it turns out utility gas services fell slightly from February to March. Commodities as a group fell slightly. Used cars and trucks. Look at this. Used cars and trucks, still ridiculous on the year-over-year inflation, right? 35% year-over-year inflation for used cars and trucks. But, hey, silver lining, at least we're heading in the right direction. Is it too small? I'll make it bigger. Here, let's make it bigger. At least we're heading in the right direction here. Used cars and trucks went down 1.8% month over month. Okay? So that's the first thing I'd like to look at. I didn't see any other. Motor vehicle repair and maintenance dropped a little bit last month. So that's the first thing I like to do. The second thing is, all right, going back to this column where my mouse is now, what contributed? What contributed to inflation last month? Like, what went up the most? And we can see here, looking at year over year and month over month, it's a lot of the things that we know about, right? Although this one jumps out to me. The meat, poultry, and fish and eggs up 13%, almost 14% year over year, jumped out to me, right? Alarming. Cereal and bakery products up 1.8% month over month. That's a big gain for cereal. Big increase for cereal, up almost 10% year over year. So we know food prices are going up. We know energy prices are going up. Is there any way to avoid this in your life? The answer is probably not, right? We're all feeling this in our day-to-day lives. From an investment point of view, you've seen fear of this play out in the stock market in the last couple of weeks, okay? I'm going to go to my Benzinga Pro now, and I want to we've talked about this at length, but think about what areas of the stock market are considered quote-unquote safe, right? The safety trades. It's utilities and consumer staples, right? Things that we need. And healthcare, obviously, right? Look at the XLU right now. Look at this ETF, the utilities ETF. It has been ripping, because everyone knows if you're going to own stocks, if you got to own stocks right now, well, which frankly, if you want to beat inflation, you need to own stocks. What are you going to own? utilities, staples, right? Consumer products, consumer packaged goods, food. Walmart is a staple, right? And healthcare. These are your three strongest sectors of the past couple of weeks. I think it all comes down to inflation, honestly. That's the only reason for their outperformance.
Spence, did you ever end up getting into any of your food stocks?
No, I never did buy. I talked about wanting to buy like a food stock last week, like a Tyson, right? I never did. Although, yeah, no, I never did, to answer your question. I bought Altria. That's a staple.
How's that doing?
Pretty good. I mean, I'm not going to get rich off this. It's such a stodgy stock. It moves like $1 a day, right? So I ain't going to get rich off Altria, but making new highs of the move again today. So I wanted to mention all that, and then I also wanted to bring to light this chart from I mentioned this on the show this morning, but Charlie Bilello, who's a great Twitter follow. If you don't follow him, he threw together this chart quickly from Y Charts, which is also a great platform as well. And this, to me, is the real bottom line. Inflation as it compares to wage growth. Oh, wait, that's not the right tweet. Hold on, that's the wrong tweet. Well, wait, what am I doing? Sorry, I'm gonna go. Was that it? Nope. Where's the tweet that I wanted? Where's the chart that I wanted to look at? Yeah, that's not it either. That's the one. That's the one. Wage growth as it compares to inflation. Okay, because inflation in and of itself isn't inherently bad, as long as wages are keeping pace. But they're not. They're not, and they have not been. Someone who just said earlier when Rob was on, you want an H pattern. Here's your H pattern. Clear as day. The blue line is wages. Average hourly earnings. They're not keeping pace with inflation. And it says real there because real means accounting for inflation. So this is the story. People's their buying power is getting smaller. That's the real pain here. It's not even about our stocks. Oh, our poor technology stocks. What are we gonna do? It's not about that. This is the story. People feeling the crunch because they have less buying power today than they did a year ago. Their dollar does not go as far, and that sucks. And that's why shit can hit the fan in November, right? Because people are pissed. In the grand scheme of things, like, I always like to zoom out, right? In the grand scheme of things, like, you know, the underperformance of growth stocks, whatever, doesn't matter. Doesn't matter. If you bet on growth long enough, eventually, odds are you'll do okay if you're diversified, right? This stuff matters, though, right? We talk about inflation as it pertains to the stock market, but no, this to me is what matters, right? Inflation compared to wage growth. The average person, not like the average investor, just the average person. So this is the chart that I'm married to right now, and I don't know the answer. I mean, I hope. I'm sort of hanging on to this idea that a ceasefire peace in Ukraine would do two things simultaneously, right? One, it would bring peace, which we all want, and two, hopefully, it would ease inflationary pressures across the globe. So I don't know what to do other than root for peace that we've already been rooting for, but I mean, damn, this is unsustainable. This is not sustainable. And whether you believe that the number is real or not, so I mean, you know, I've seen people say, oh, well, the actual number is more like 15%, whatever you want to say. The point is, it's at a 40-year high. Okay, And it's been what we've been increasing since what last summer was when the transitory argument first got play.
Well, I think
So
actually
it's
maybe
been almost a year.
I think this CPI print last year, April's or March,
Let's find out.
was maybe the one that first got people kind of like ears perked up, like, oh wow, this was a lot higher than expected. But I don't know, Spencer. I mean, we went through that data. There are some things, like you said, like seeing cereal up 1.5% month over month is significant. In the wheat market, it's so to me, I want to wait and kind of see. This is kind of what Charles Evans, the Chicago Fed president, was saying yesterday, was we're just going to continue to get more data out. I mean, you mentioned the PPI. PPI actually came in lower than estimates last month. So if that trend continues, then that could be a great lead indicator that inflation may peak. If you're seeing that the producer price index, that
which I think is tomorrow.
I think so.
Yeah.
Is the price, of course, that companies are paying for goods.
Yeah.
If that goes down, then you can assume we'll also see savings as consumers.
Wait, you're right. I think you said April of last year
Yeah.
was the report, and they don't have it on this chart, but this is just annual change in CPI year over year. And yeah, it was April. It was this time last year.
Because I remember vividly. So what happened was we had Peter Schiff on the Power Hour the day before the CPI print in April.
And he was
talking about how bad inflation was. And I said, like, oh, well, we're going to see the CPI tomorrow. And he was like, oh, well, the CPI, like do you think what the government's telling you is real?
Not a real number.
And then the CPI was high. And then I go to his Twitter and he's like, see, the CPI is high. I was right. It was like, wait, hold on. You literally just said yesterday this number's bogus. But now that it reaffirms your case that CPI is high or that inflation's high, it's a real number. So
yeah.
I don't know. I mean, I understand people that are skeptical of the numbers that the government puts out, but if you want to dismiss those as being like viable stats, then it's like, okay, what do you want to look at then? Then give me some set of data that we can look at. And for right now, to me, that the data we have coming out of the Bureau of Labor and Statistics is the best we've got right now.
Yeah, so let's talk inflation hedges. Things that people are going to always spend money on, right? Food, right? Not all food, right? Like, but things like poultry. People will always spend money on that. People, eggs, bread, milk. Stores like Walmart, Costco are inflation hedges to me, right? I think Target a little bit less so.
I think, I think Target has become pretty much I think for a while it was seen as kind of
Target's bougie Walmart, is it not?
Yeah, but what I'm saying is I think Target's even more increasingly so over the past few years become a grocery store play. Like it didn't used to be as much of a grocery store play, but now it is. So I do think Target will be pretty safe in the face of any, inflation, whatever. So really, Spencer, and a lot of these names that you mentioned fall in this category. But what I want to look for in these times are stocks like Walmart, like Target, that have the potential to appreciate in value, the share prices, and also pay a dividend. Because that way, you can ensure that you're at least getting paid something for holding these stocks, while returns might not be as great as in a ripping bull market.
Okay. Do we have any ideas from that?
Well, like I said, I think the ones you just mentioned, Walmart, Costco, they aren't huge dividend plays, but they play a dividend. I've mentioned 3M on here before as one that I'm looking at as a trade. 3M pays a pretty nice dividend, about 4% yield. And that is one that, 3M just produces so many goods that are necessary both in the industrial world, medical world, business world, you name it.
Yep.
That no matter what,
it's been a laggard though, hasn't it? It's been a bit of a dog.
Yeah, and I've talked about the headwind, like why the stock's been underperforming, big lawsuit, some other things, but I'm
with you on 3M.
I do think just from the dividend standpoint.
All right, here's one inflation hedge. What about Disney as an inflation hedge?
Nah.
No?
Not a fan.
Really? Disney World's packed.
PE's high, stock's still expensive. I think I think if we continue to see this uncertainty on Wall Street, I think we'll see investors flock toward stocks that are quote unquote. Looking at the chart, this does look very interesting, Spencer. Kind of a potential double bottom reversal here. If it looks like
double bottom, like a quadruple bottom down here.
Well, I'm just looking at the more recent. Looks like we hit around 130 March 14th. We're back down to 130 right now. Looks like some of those previous lows are a little bit higher.
Whoa.
But
wait, so this is pre-COVID, which is 140 is the pre-COVID level. We're at 131 right now.
So right now Disneyland's packed, right?
Yeah,
but
yeah,
I'm talking
Disney's
about
packed.
if inflation continues to stay high.
Yeah.
Doesn't that prices people out, right? Plane tickets gonna be more expensive to Disney. Hotels gonna be more expensive. The tickets to the park themselves. I would think.
I know, but there's always inflation at Disney World. It doesn't seem to stop people ever. Like Disney World is so expensive,
Yeah.
and yet, people go. But it's not just the parks though.
Jay Rice and Tyler Swanson saying, "Go woke, go broke," talking about Disney. I don't think Disney
People
is
dropping their. Well, you know what? Oh wait, when did all that stuff really start? A couple weeks ago, so probably not. I was gonna say we'll probably find out from the company, but we on the next earnings report, but we probably won't actually because this whole thing, unless it started, the quarter ending in March. We'll hear about that in a few weeks from the company. But I doubt they'll address it.
Yeah.
Anyway.
I don't know. I mean,
all right. So Disney not an inflation play, inflation hedge.
Well,
so.
I am. It is interesting from a chart perspective. Plus, too, honestly, if this idea of go woke, go broke, like Ben Shapiro saying he's going to invest money to take on Disney. If that's
good luck with that.
I'm
man.
saying if that's part of the reason Disney stock is down,
that's
then
the
I'd be
stupidest
encouraged.
thing ever.
Exactly. Then I'd be encouraged by the dip. Like if people are really, telling their kids, "Oh no, I'm not going to let you watch Disney movies anymore because they're too lib." Like you're just a bad parent. Like your kids are not going to be happy with that decision, like at all. Like the kids don't give up. The kids don't care about the politics. The kids just want to watch the movie and they want to see Frozen. They want to go to Disney World. They don't care about that. So, yeah, Daniel,
Disney has a. Well, actually, no, not a monopoly anymore. I was going to say Disney has a monopoly on the mind share of children, but not anymore because I would argue YouTube now is eating Disney's lunch in that regard. Some of these YouTube shows, man, directed at kids are unbelievably popular. Like it's insane.
Yeah, the Pepe Le Pig was
dude. It's unreal.
Yeah, Daniel, I've gotten that I look and sound like Ben Shapiro. It's not really
He does not sound like him at all. Give him a break.
Not a favorite one of my compliments.
Give him a break. Okay, wait. So what I want to do before I forget is to do a crypto update because we have some crypto news today, Aaron. We have some relevant crypto news, actual news in crypto land. Let's bring on the heat map and see how we're doing right now. Where's my heat map? No, not there. Oh, there it is. All right, wasn't it just yesterday when I was like, gosh, it seems like we're either all green or all red every single day. Not today. Today we are mixed like a Christmas tree. Did you see the news that I'm referring to?
I did not.
Robinhood.
Oh.
Robinhood has announced as of today, you can go on Robinhood and buy or sell Polygon, Matic, Solana, and Shiba Inu. So, how are we doing? Oh, Shiba Inu up 19%. That's interesting. Oh, Matic up 4%. That's interesting. Solana, how are we doing? Only up 1.5%. Lame. Super lame. And where's my Polygon at? Is that on here? Or am I blind? No, it's not on here.
I actually did see this, not like in any news headlines. I saw it in my Robinhood.
Oh, yes, it is. It's right there.
It said, "Oh, you can buy SHIB today." I was like, "Oh, that's pretty cool."
Yeah. Okay. Yeah. So anyway, go more cryptos. Heat map looking spiffy. This is of course a 24-hour performance chart. So crypto's going to move with tech though, right? So this morning crypto was ripping off that CPI print. But I'm sure it's gone down here in the past couple hours. Let's take a look, see at Bitcoin here.
How can you short SHIB, Tyler Swanson? So I actually wrote an article about this. FTX has a lot of options to shorting a lot of popular cryptos out there. But FTX US does not have the same capabilities. With that said, if you were creative and you Googled, about VPNs and how to maybe use a VPN to make your IP address appear like you were not in the US, then you would hypothetically be able to access that FTX tool of being able to short some of those cryptos. All hypothetical.
VPN. Speaking of VPNs and privacy, did you catch John Oliver's segment from?
Dude, I haven't watched like a John Oliver episode in a while, but there are like 5 that I really have been wanting to. And
okay, I haven't watched John Oliver since before COVID.
Okay.
What are you doing?
I'm picking something up that I dropped. All right.
You okay?
Yeah.
Okay. I have not watched John Oliver in probably 2.5 years. Okay. I don't know why I just stopped. Whatever. Actually, I do know why I stopped because his segments were starting to piss me off.
Okay.
Because they would always leave me with a bad taste in my mouth about about the world.
About the world.
And I was like, dude, I don't need this.
Okay.
Anyway, I watched him last night.
Data brokers?
Yeah, Data Brokers. I hadn't watched him in 2.5 years, and oh man, was it good? If you're into, messing with Congress, it was a really insightful segment. It was pretty long. It was about 25 minutes, but it was very insightful. All about data brokers, all about the collection of our data. We all know our data is being collected. It's not about that per se, but it's about really how easy it is to collect and how easy it is to identify you from your data, even if it's been anonymized. So check it out. But you mentioned the VPNs really it reminded me of that. Yeah. Speaking of things that I watched, I also watched the Boeing documentary. Did I mention that yesterday? No. You had to leave early. Boeing, Downfall. The Case Against Boeing is a new doc on Netflix. If you are into this sort of thing, like the true life, documentary scandal type thing, you will like this one. If you like business documentaries, you will like this one. It was a great look at the events of the past couple of years. Actually, beyond that, really the events of the last 30 years in Boeing.
That's just to give me an idea. We should start a production company that specifically, it's like a short report production company. Like you just go to all the short report and say like, oh, like Hindenburg, you're getting ready to release a thing on Clover Health. We'll do a 30-minute documentary, a little short documentary on Clover Health with you guys. They'd probably like that.
A short doc about a short?
A short doc about a short, because there are people that probably
don't want to read a report.
Yeah, I'd probably fall in that category. I'd probably rather watch the Netflix thing on Boeing than read a short report on Boeing.
Yeah.
Right. But Spencer, so I got a couple things I want to.
Wait. I'm sorry. Before we go though,
Boeing.
I forgot. Wait, I just forgot to mention that anybody who wants free Bitcoin, go to Voyager. Use the code ZING when you sign up. What? Okay, use the code ZING when you sign up. Fund your account with $100, make a trade, and they will send you 50. Do it. Now what? Sorry.
All right, couple things. I've got a couple new trades.
New trades. New trades. I need to add a trade idea to.
Maybe more importantly, I have a new place I'm sharing my trade ideas.
I have to do that.
Let me go ahead and share my screen, let you guys see. So this is a cool new tool on Benzinga Pro. If you don't have Benzinga Pro, I have good news for you because you can sign up for a free 2-week trial, no credit card or anything needed. There's a bunch of useful tools here on Benzinga Pro that I use every single day. Here's the news feed, keeps you up to date on all headlines, details page if you want to find out any numbers about a stock, the chart, etc., etc. But this tool that I'm showing right here is the Trade Ideas tool.
Probably one of our most underutilized tools, I think.
Well, it's also one of our newer tools.
Well, that's why it's underutilized.
But you have guys on here like Nick Shaheen, who we've had on the show before, who are experts in, either technical analysis trading, options trading, whatever it is that they're experts in. They are sharing their trades in real time. So Nick Shaheen earlier at 11:08 a.m. is saying he's bullish on Chewy. He lays out the trade, the duration, how he's trading it, his stop levels. My trade ideas in here might not be as fully fleshed out as Nick Shaheen's, but as you can see, I just posted 2 within the last hour. The first one, bullish on Netflix. So I talked about this with Gareth Soloway. Netflix, I consider oversold down here at 350, looking to play for a 10 to 20% upside swing. High risk, playing 375 calls that expire May 20th. And then this trade, which might be a little bit... Wait, talking over who? Who am I talking over?
I think it's talking to me.
Oh.
So anyway, as I was saying.
I apologize if I spoke over you. Bearish on Bed Bath & Beyond.
They report tomorrow.
Da, da, da. Displaying the earnings data. But anyway, Bed Bath & Beyond reports earnings tomorrow. I'm playing puts that expire this Friday. Basically, I think going into this earnings, they are going to cite supply chain issues and inflation, maybe even labor shortages, and there will just be a lot of headwinds, and the stock will come down. That is my prediction, not investment advice. So I will show you guys. I'm not just some guy here sitting on YouTube.
Yeah, and by the way, the whole point of this Trade Ideas widget, the idea was like, we have people at Benzinga, we have our experts, we have our entire user base, and no place for all of them to go and share ideas with one another, centralized. That was the impetus for this platform, for the widget. If you ever have ideas, seriously, drop it in there. And if you're looking for ideas, go there. This is also one of the biggest piece of feedback we've gotten about Pro over the years is how do I find ideas besides from my own brain? Like, where else can I go? Go to the Trade Ideas widget. That's the point. People putting their own ideas can maybe jog something in your brain, give you an idea. Pay it forward. That's what it's about, paying it forward.
So these are the open trades I have right now. I have some long trades.
Okay, what do we got here? We got a Bed Bath puts.
Bed Bath puts. Yep, I got into these. Let's see, 39 minutes ago. 10 contracts at $60 a piece. So it's a $600 trade for me, Spencer. It's actually a bigger one. So okay. $600. Already up 8% on it right now, up $50, but I'm not going to close that trade because I didn't get into this trade to just make 8%. I got into this to YOLO the option. So we're going to see what Bed Bath's earnings are like tomorrow. I also...
It's going to be bad.
This is kind of more of a hedge. I bought some Jpmorgan puts.
All right, so
this is more of a hedge. I say that...
Okay, explain it. Yeah.
So the biggest price index, the PPI, but
yeah,
I think the predominant headline tomorrow will be the bank's numbers that are coming out, which can be seen as kind of a barometer for not really the overall economy. There are other measures that we have that are better for that, but just I think, and again, this is just my personal prediction, that if we see bad earnings from Jpmorgan and the other banks tomorrow, that the market will be down tomorrow. So I want to be able to make a few bucks off these Jpmorgan puts if that is the case. Now, if I'm wrong and Jpmorgan reports good earnings and the banks report good earnings and the stock market's up, I won't be upset. I'll lose this money that I bought on these short-dated puts, but
I think the bar is low for tomorrow. I think the expectations are low. The banks really only benefit from higher rates if bond prices go with it. right? So I think their margins are getting squeezed a little bit here. We'll see. But you know what? Let's do this out of curiosity. So you have the Jpmorgan puts for Thursday.
Yep, that expire Thursday.
Okay, so
oh, Daniel, I'm sorry, I didn't realize Jpmorgan Chase was your bank. My bank's Bank of America.
My bank is Capital One, but I'm in the market. I'm in the market. I'm in the market. Should I just go to a credit union? Probably.
Who's Gianni? Gianni is Gianni DePoce. He is one of our options experts that runs a newsletter. He's a pretty good stock picker. Or he's good at identifying trades.
Yeah, if you want to know where to find Gianni's stuff, very simple. I'm going to drop a link in the chat right now. Before I find it. Where can I find Gianni's newsletter? Gianni's newsletter is...
Wait, Spencer, can I humble brag for a second?
Yeah, wait, where's his newsletter? It's I know it's on here, but it's not on here. You know what I mean?
This is an inside look into our tracking of which of our articles are getting the most reads. Look at this, Spence. This might be a first in my year plus here at Benzinga.
Right. I'm trying to find Gianni's newsletter, but I can't find it right now because I don't know why. Sorry, what's on the screen? You're doing well in traffic?
I'm saying, look, top posts last 10 minutes.
Oh, they're both you.
Yeah.
Look at you, my man.
Yeah.
Shoot. How do I find Gianni's newsletter?
That's fine. While you're looking at that, I did have something else I wanted to share as well. So this is from Ryan Dietrich. We have talked about some things that he's shared on Twitter before. He's with LPL. I'd suggest following him on Twitter because he just shares good statistical insights. And here, Spencer, I think you'd find this interesting as well. So this chart right here, I'll go full screen on it for a sec so we can maybe get a good look at it. Here we go. So this is tracking the strongest bull markets, all the bull markets that have gained 100% since World War II. And as you can see down here, this bottom, what is that, the x-axis?
Yes.
The x-axis is showing you the duration in years. So this green line right here was from March 2009 to February 2020. So from after the 08-07 stock market crash, we were in, and of course there were dips, there were times where the market came down, but overall from that time we were in a bull market from 07 to 2020, of course, or sorry, not 07, 09 until, March 09 to February 2020, 11 years. Here, this blue line, that's us right now. So some things to note here. We stronger positioned, a faster growth to 100% than any other bull market in history. But with that said, and looking here, look at this green line. This is from, that green line is big pull down here in 2011, whatever. That's kind of where we're at right now, right? We're getting this big drawdown and it feels like, oh no, the bull market's over. But just looking at this time horizon, you never know, right? Some of these bull markets lasted 4.5 years. Some of them lasted 6 years. Some of them lasted 7 years. The longest one lasted more than 10.5 years. So I just would be careful, and I'll just do this real quick. Go to SPY price on Google, because this just makes it easy to track the percent changes. So from the COVID bottom to here, even with this recent pullback, we're still up more than 92%. Now from the highs to where we're at now, let me zoom in because we were about, January 4th was our high. We're only down 8%. So now if we correction territory, but not bear market territory.
Okay. Sorry, I was very focused on finding Gianni's thing, and I found it finally.
It's okay. Here's the chart. Here's the chart I was going to show you.
Okay.
So these are the longest bull runs. Here's where we're at right now. This blue one.
Well, you said this from Ryan Dietrich.
Yeah.
95% of his charts that he puts out there are bullish.
Correct.
I'm here for it. I'm not against it.
Well, I think his whole thing, and again, he's with LPL, and I think
Yeah.
as like a wealth manager is like, if I were my number one point I would be trying to get across is that short term, I don't care if the market's down 10%. What does the market do over time? It goes up. So it's all about like easing fears of people that want to sell when the market's down. That's, I would say, your top job as a wealth advisor instead of, trying to time like if you're in charge of other people's money, you're not going to go try to buy puts because you think the SPY is coming down 3%. No, your job is to just keep people invested and know that over time the markets tend to go up, and then position yourself in safer positions when there are turbulent times where it does look like markets will come down.
Yeah, I mean, you're right. You're right. His number one job is to keep people invested, which I am all about. I respect and agree. I'll put it in the chat. Actually, I already did put it in the chat. So check that out. But Gianni's got one of several Benzinga premium newsletters that we have here. So there's that. Oh, shoot. Okay, you wanted to mention that chart. I want to mention this. Let's get that off the screen now. Am I on the right page? Yeah, all right, everyone. We are coming into the home stretch-ish. We're just about a month away, a little over 4 weeks away from the FinTwit Summit. Benzinga and Lupton Capital throwing this on together. Reminder, we got to get Jonah back on the show to talk about this.
Let's do it.
May 13th and 14th. It's a Friday and Saturday. The Aria Resort and Casino. I was just there last week. Can confirm it's beautiful. It's gorgeous. Here's what I want to draw your attention to. This thing right here. Ticket prices are going up on Friday. They call it Good Friday for a reason because it's a good time to buy your tickets now. That's not why they call it that, but I just made that up. Anyway, the link to sign up or buy a ticket for this conference is in the description of this video. I'm going to throw it up on the screen right now. There's the link with the discount code BZYouTube20. BZYouTube20. That will get you 20% off one of two things, or two of two things. Either general admission or this blue button on the top. It says Join Inner Circle. That's the Benzinga Inner Circle workshop that it's only going on for part of the day, I believe, and we're limiting access. As far as I know, it's still open, but it will not stay open until the start of the event. So that code up on the screen, BZYouTube20, it'll get you a discount to either ticket because they require two separate tickets for the Inner Circle or for the general conference. We are extremely excited to actually, before I move on from the Inner Circle, just to give you an idea of what that is, it's a workshop within the event, within the conference. Nick Shaheen, Chris Capri, and Matt Maley, right? Mark Petrino, sorry. Mark Petrino will all be there doing basically hands-on coaching on their trading strategies. Up close, impersonal, basically one-on-one coaching, right? For several hours over the course of both days. So that's the Inner Circle Pro workshop. All right. The general admission conference, though, is still going to be amazing. Even if you don't do the workshop, we've got literally hundreds of people signed up already. As far as speakers, people that you know, people that you've seen on social media, people that we've had on our show dozens of times. Brian Shannon, he's great. We got to have Alpha Trends on the show. Jake Wojastik will be there. It's going to be awesome. I'll be there. Come hang out. At the very least, come hang out. It's going to be a blast. Again, May 13th and 14th. Link on the screen. Discount code up on the screen. Check it out. All right. I have not looked at the overall market here for.
Oh,
a
we're
few
selling
minutes.
off.
Damn,
We're
fade.
selling off.
Fade,
Hard, hard,
fade me, Aaron. Fade me.
Why did you call for a rip today?
No, just I don't know. We're red? Yeah, we're red. Yeah, we're red. We're red across the board. Nah, different sectors holding up still, but we are. Oh, whoa, look at the Russell. Wait, let's pull up the IWM here.
Is that holding up?
That's interesting.
Wow.
Well, I mean, it's still green, but it's down, but it's still green.
Oh man, my BlackBerry, or not my BlackBerry, my Bed Bath & Beyond puts could print here if it falls through.
How the diamonds? Oh man, what a reversal! You know what? I'm calling it now. 330 ramp. It's gonna happen, everyone. You heard it here first. 330 ramp into the close.
We'll see.
What?
Should I buy some SPY calls? Expire tomorrow.
Oh,
That's an interesting thing that I noticed with the SPY options this week with no market on Friday. So the S&P 500, there's a couple other, I think the Qs have it as well. I don't know if there are any other tickers, have midweek options that expire on Wednesdays. So this week, the SPY has options that expire tomorrow at the close, but then also Thursday at the close. So you have the option of buying, like, do you want to buy 1 day out or you want to buy 2 days out? So I just thought that was interesting today.
Okay. Guys, that's gonna be just my day for the show today. This does not feel like 2.5 hours, but we had a lot going on today. So
what's coming up next, Spencer?
The roadmap is coming up next. Brian Moore, Chris Kachi, doing what they do. Maybe NFTs. That's an inflation hedge. NFTs. Yeah. Isn't it? Well, no. Well, yeah.
It depends on if the prices of the NFTs inflate as much as
Right.
the dollar does.
I feel like collectibles and NFTs. Let's be clear, they are collectibles. That's what they are. Collectibles is a decent inflation hedge.
Yeah.
Obviously, if the market crashes, you're screwed. But NFTs, sports cards, art, all these things are inflation. Real estate is an inflation hedge. We'll talk more about that on Thursday. Wait, what's going on with Twitter, Quantum? Sorry, you piqued my interest here. Yo, what a reversal for growth. Oh, Twitter's leaking. Oh, Kathy. Eric KK.
Wait, did she just buy Twitter?
No.
Oh.
Eric KK is leaking. All growth is, everything is leaking. What else is new? Holy cow. All right. That's going to do it for our show here today. So we got the roadmap coming up next. That'll be followed by a exclusive sponsored interview that we did with Floki Inu. That'll air at 3 o'clock. That will be followed by At the Close with me and Joel. That will be followed by Cannabis Insider, which will be followed by Money Mitch.
Hell yeah.
And that is the breakdown of our shows for the rest of the day.
Let's go.
Do us a solid, everyone. Just hit that like button real fast. I know it's hard. I know it's difficult. But if you could just, take that little finger and just go thumbs up.
Also, if you want to follow along to our trade ideas, make sure to sign up for that free trial on Benzinga Pro.
Pro.benzinga.com.
Hope to see you guys there.
Pro.benzinga.com. Free 2-week trial for everyone.
Spencer, we never plugged the boot camp tomorrow.
Oh, dude, I told you. I was on my list and I just forgot. We're not going to have a show tomorrow, everyone. No Benzinga Live tomorrow because starting with live trading, we're going to go pre-market prep, then live trading, then the next Benzinga boot camp. Another full day of workshops with people like Genevieve Rosdector, with people like Mark Petrino, Nick Shaheen. Who else do we have tomorrow? We have I mentioned Mark already. I mentioned Genevieve. Who else do we have? It's going to start off with live trading. That's probably going to be one of the most fun parts because those guys rock. Chris Capri will be there. Then I mentioned him. So that'll be live tomorrow, basically from 9 a.m. to 3 o'clock. So no Benzinga Live. Aaron and I will be back on Thursday. But tomorrow's going to be awesome, and we're here for it. So smash the like button, please, and thank you. And we're done. the roadmap starting right now.